Talks are in a serious situation after phoning Ursula von der Leyen. Still, officials in Brussels are confident of a breakthrough. Matt?
Let's take a look at futures right now. We've seen them down about a quarter to a third of 1%, depending on which benchmark contract you look at. You can see Euro Stoxx 50 futures down about 1/3 of 1%. And really, we saw or do see these kind of light drops on U.S. futures as well. But as Danny Berger points out, it's going to be a very volatile Friday because it's quadruple witching day, and you'll see the expiry on the New York Stock Exchange of a number of different contracts. Here's the global macro movers screen back up and working today, and you can see in the left-hand column here your equity indexes. They will populate as they start trading. The FTSE unchanged at the open. The IBEX in Spain down 0.5%, so a bigger drop on the IBEX than you're likely to see on other continental indexes once they open up. Here we see the DAX out of the gate down 0.2%. The FTSE right now down about the CAC 40 down about 0.3%. So you see a little bit of a mixed trade, but all to the downside this morning. This is as U.S. lawmakers continue to wrangle over a federal spending deal in Washington. Of course, Boris Johnson now sees the Brexit situation as a serious one, and lockdown restrictions continue to get harsher and harsher throughout Europe. Joining us now is Ben Guttridge, Invesco EMEA Director of Model Portfolio Services. And Ben, let me ask you first about the U.S. stimulus haggling going on. It's been dragging on for some time now, and it does seem to set the mood for markets around the world. Why is it so key for global equities?
Well, I mean, this is sort of classic negotiation sort of theatre, not least because the Republicans, we feel, actually did. Obviously, they lost the White House, but they made ground in the House and retained the Senate. Or at least it looks that way. So Republican lawmakers feel to reward their base for supporting them. They need to take these negotiations to the wire. A stimulus bill is needed. It's clear that the U.S. economy will be struggling under the weight of a resurgence in COVID infections. And so getting it through sooner than later would be good news to markets. Clearly, if they don't, because of that Republican sort of obstructionism to a degree, we still think a deal comes relatively soon into the new year. So we do think it's one of timing that markets will respond favourably if we get this deal done, but it needn't trigger a bear market, if you like, if we have to suffer more delay.
Okay, and Ben, good morning. How much do we watch the detail here about a stimulus deal, the conditionality attached? I ask this because a couple of Republican lawmakers are saying that the bill must include a stop date for some of the Fed's facilities. And the Fed, of course, has stepped in to keep markets moving and to support parts of the economy that maybe it hasn't in the past. And some Republican lawmakers are unhappy about that. I guess that would be something that the market would watch carefully, whether there was some condition attached to this bill which required the Fed to step back.
Yeah, I think you're right that the granular detail will reveal the extent to this is sort of stimulative, to the extent anything has to be paid back or is, has that sort of grant nature to it. But I actually think by the time, if we get a decent number, you get a decent deal. By the time strategists like myself, are haggling over those sort of finer details, I think the market may well have sort of moved on and be looking at vaccine rollout. That a package can be done, I think, is the key story. That a deal can be done is the key story. And as you point out, at the margin, we think that the structure of the deal will have an impact. But like I said, it's not that we're not watching it, but market direction, I don't think, is going to be determined by it.
What do you think the weaker dollar, Ben, and the rotation that some are pointing to from U.S. to European stocks means for the S&P 500, for the NASDAQ?
Well, I think it's a really interesting one. We sort of look at this Merrill Lynch survey. I'm sure you've had a glance at it. That does seem to suggest that fund managers, institutional managers, quote unquote, the smart money is now extremely confident about a rotation into the value sectors. That would suggest that some of the money is already a lot of that money's moved across already. So it could be that the contrarian trade now is to retain those sort of higher growth positions on the back of the weight of money that may yet return to it if the economic outcomes aren't as salubrious as perhaps the consensus is now thinking it might be.
Yeah, and is that because some of the challenges that the tech sector faces then, Ben, and I'm thinking here about the legal challenges or the legislative challenges it faces, do you think that they just won't come to anything, or you think that the growth prospects for the sector are just so compelling despite those?
Well, again, I really think the regulatory picture is, a fascinating one. It's one that's been extremely well telegraphed that, the Republicans are really concerned about how their voice has been shut down on social media, and the Democrats, of course, very concerned about data. And so both are clearly, gunning for this sector. But the market just really hasn't, as far as I can tell, obviously difficult with the counterfactual, but the market, as far as I can tell, is just not interested in that regulatory theme. And so that suggests either the market's wrong or perhaps because they can't align themselves to how they want to tackle this sector, and of course the good that it's doing for consumers and indeed small businesses, that actually, when it comes to it, the regulatory decisions taken won't have much teeth. So it's one that circles the sector and will rear its head from time to time. But over the medium term, long term, I'm not too concerned about the regulatory outlook for the sector.
Ben, thanks very much. Ben Guthridge, Invesco EMEA Director of Model Portfolio Services. Thanks very much for joining us. We've got some pictures coming through to us. Michel Barnier, the chief EU negotiator, of course, for the European Union in Brexit talks. He's addressing the European Parliament, and some of the lines he's giving us this morning. Obstacles for a UK agreement remain large. He says Brexit talks have a narrow chance to an agreement. The possibility of agreement does remain. It is the moment of truth for Brexit. These live pictures coming to us right now. Michel Barnier addressing the European Parliament. The latest UK side of things has been that these talks have been blocked. Fish and level playing field, to some extent, the latter still remains an issue. The extent to which recovery funds in Europe are included in that level playing field conversation is interesting. This European Parliament you see here has put a deadline of Sunday on these talks. Will we get one over the weekend? We discuss this next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the session, looking at a little bit of a mixed picture here. You can see the FTSE showing very slight gains, but a green arrow nonetheless. The DAX down about 0.2%, as is the CAC 40. Let's take a look at some of your movers this morning. First off, CD Projekt is the biggest loser after Sony is removing Cyberpunk 2077 from its PlayStation Store amid concerns about big bugs in the game, also having to give refunds to any buyers, even of the digital versions. Microsoft is doing the same. Vivendi is gaining after Tencent Group buys another 10% stake in its Universal Music Group. Tencent, or the Tencent connected company, already had a stake in UMG, but it's buying more. Vivendi announced this morning. As a result, you can see those shares up 2%. And then Restaurant Group, which is the name of the company, not just a restaurant group, slumping after its Wagamama restaurant warned that the first quarter in 2021 is going to be challenging with COVID restrictions as well. Probably something you knew already in your hearts, but maybe that announcement has pushed you to push the sell button on that stock as it's down 5% this morning. Anna?
Yeah, really interesting to see those movers. Then some interesting news flow behind them, Matt. We're also getting these latest lines coming through from Michel Barnier. Still a chance of a Brexit deal, but large obstacles remain. That seems to be his messaging this morning at the European Parliament, where we are seeing him addressing MEPs. These live pictures coming to us of Michel Barnier there. The pound fairly unmoved, really, by his comments this morning. It was around the 135 and change level, and it remains so. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services, is still with us. This is getting towards the end game, isn't it, on Brexit then? Ben, what is your working assumption with just days left, not even weeks, I think now, until the transition arrangements come to an end?
Well, I think our working assumption is that a deal is struck. You know, that fishing seems to be the only obstacle that remains, and of course it has this symbolic, no greater perhaps signal of sovereignty than controlling one's fishing waters, that it has remained the final sticking point, and therefore Boris takes it down to the wire on this particular issue. But that is a numbers game, and it would seem a great tragedy for that to be the ultimate sort of stumbling point. So we do think, I guess, a deal is done, as does perhaps the market now, given sort of sterling's gradual ascent over the past sort of a couple of months.
So what kind of deal do you expect then, Ben? I mean, is this going to be a deal? We've heard so much about a skinny Brexit deal. Is it going to exclude a lot of things that consumers are going to be surprised about? Is it going to exclude things that financial services providers are going to be surprised about?
I think you're right, Matt. I think consumers will be surprised, and businesses will be surprised that this deal does require a little bit more red tape and will require a few more tariffs, and to the extent to which that's passed on to consumers, that will also be a bit of a surprise. And indeed, many strategists have articulated that a deal isn't a million miles away from no deal, but we would dispute that. At a face level in terms of aggregate tariffs, it isn't too far away. But a deal is a platform from which you can negotiate better terms. No deal could well have sort of an acrimonious, likely to have an acrimonious air to it. And then, of course, whilst you might think you have certainty over what your new WTO terms are, of course, you don't have certainty about what happens next. Will negotiators get back round the table quite quickly, or will it linger on for months and years to come? So whilst the mathematics aren't wildly different, the duration certainly could be, and so therefore we do think no deal still has could still have quite a negative impact on the pound and UK assets relative to a deal which may not deliver the upside surprises in terms of cross-border transactions.
Yes, and it's interesting. A lot of people make the point to us, Ben, a lot of investors make the point that it might have implications for things, as you suggest there, that aren't even in the deal. So even if financial services is largely excluded from what is being currently discussed in Brussels, the mood set by these negotiations might have a knock-on impact on what financial services can expect to achieve in the future. That is a point made by, I think, our guest in the 7 o'clock hour here on Bloomberg TV, and many guests have made that point before. What about the stock side? So we've talked about FX markets. What about stocks, UK stocks, the extent to which they're undervalued, and what does, if we get a deal and that rallies the pound, knee-jerk, does that lead to selling of the FTSE 100, buying of FTSE 250, or does it not? Does that negative correlation at the large cap level not hold?
Yeah, I think that's a really important point. You know, sort of the working assumption, the day-to-day is that when the pound is strong, all those overseas dollar, euro, Asian currency earnings translate into less pounds, and that's, you know, not good for UK assets. I think we'll see that negative correlation break down in the face of a deal because, you know, you remove that tail risk, you remove that rather, you know, grim-looking outcome that really brings international investors back to UK markets, buying sterling assets, buying UK shares, and eroding some of that discount that exists. So in the short term, even though I've sort of highlighted that I think markets are probably anticipating a deal, there's still quite a tail risk involved if no deal transpires, and therefore the removal of that tail risk will encourage international buyers. I would expect the pound and the FTSE and UK stocks to perform well on an absolute and relative basis upon confirmation of a deal. That is a short-term trade, not necessarily my area of expertise. Over the medium long term, you know, UK businesses, you know, not necessarily blessed with as much growth as, you know, US and Asian and emerging market assets, but over the shorter term, yeah, UK assets look well placed.
I got to ask you finally about Bitcoin just quickly. Is this becoming an acceptable asset for serious investors to have in their portfolios?
I don't think we're there, but the direction of travel is that more and more people are looking at it. Certainly, I mean, it's very difficult. I guess my sort of starting position is, given that, you know, governments can't really seem to see who's dealing in it, there is sort of an anonymity about some of the transactions in Bitcoin, and the inability to tax it therefore makes me reluctant to encourage people to buy it. But in the absence of any of tighter monetary policy for a long time to come, you know, bubbles can get even more inflated.
All right, it'll be interesting, Ben, to see if they start putting digital currencies on the CFA exam. I wonder how mainstream this thing is going to become. Ben Guttridge there, Invesco, EMEA Director of Model Portfolio Services and a CFA charter holder as well. He's going to continue the conversation with us on Bloomberg Radio at 9 a.m. UK time. You can tune in for that on London DAB Digital Radio. Now let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Well, on that CFA note, I'll let you know whether they do add Bitcoin, considering my exam is next June. But anyway, Moderna's COVID vaccine has won backing from a panel of experts who advise US regulators. Food and Drug Administration advisors voted 20-0 with one abstention that the benefits of the vaccine outweigh any risk. It sets the stage for the Moderna shot to be the second vaccine cleared in the US. A group of US states has filed an antitrust lawsuit against Google, the third in 2 months. The lawsuit accuses the search giant of illegally monopolizing internet search and search advertising. It alleges the company used a series of anti-competitive contracts, hurting consumers and advertisers in the process. Google says it's improved search results in ways that many regulators had previously deemed pro-competitive. Monte de Paschi is planning to raise fresh funds of as much as 2.5 billion euros to cover capital needs. The fundraising is needed to comply with ECB requirements, but is also seen as a key step to make the bank digestible for a buyer. The decision comes as Italy's finance ministry is said to be intensifying a push to sell the loss-making lender to UniCredit as soon as early 2021. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you very much. Laura Wright here in London. Coming up on the programme, copper's bull run shows no sign of abating as the metal tops $8,000 a tonne for the first time in 7 years. We take a look at what's driving the rally next. This is Bloomberg. Welcome back to the European Market Open. 22 minutes into your trading session this Friday. European equity markets look like this. Fairly mixed, actually. The DAX and the FTSE 100 eking out some gains, elsewhere a little more subdued. Something that is not subdued today is the price of copper. Copper's bull run shows no sign of abating, with the metal topping $8,000 a ton for the first time in more than 7 years, just as global inventories tumbled to a multi-year low. Let's get into a conversation with our metals reporter, Mark Burton. And thinking about those inventories, I was just looking at some comparisons that seem to go back to 2014. So we've got to go back quite a way, haven't we, to see a time where global stockpiles were at these kind of low levels, Mark. That's telling us a lot about what, the amount of stuff that's being mined, or is it actually part of the demand story?
Yes, absolutely. And there were further drawdowns in Shanghai stocks today, and they're now at the lowest level since 2011. And that's quite a telling indicator about how China has performed this year. Yes, there have been supply constraints early on in the pandemic. Miners were struggling to maintain output, as you'd imagine. But really, the strength of this rally, I think, has been driven primarily and firstly on the strength of Chinese demand. And we've had this incredible pull on global copper inventories as Chinese import records have kind of surpassed all precedents, basically. There's been an astonishing demand for copper in China. And clearly, if you look at the level of inventories today in China, it's not as though this has all just been front-loaded and strategically acquired during the kind of the early frenzy of the pandemic. If you look at demand indicators in China today, they're still running very, very strong. Citi have data suggesting that November's end-use copper demand was up at around 10% and is likely to be up a further 12% in December. So China has done an awful lot in driving this rally. There's a second kind of overlay to it. Over the summer in particular, people were increasingly focused on how the rest of the world would. Sure. Hi,
Mark. What's the best way to have a position in copper right now? Do you want to buy the contract straight up? Are there ETFs that are popular to trade? Do people like to buy miners instead of the underlying commodity?
Yeah, I think it definitely depends on the type of investor. Institutional investors will, by and large, be comfortable buying the contracts, but there's a degree of hesitation in buying commodities where you have to worry about delivery and the roll yield and so on. So from that point of view, there's also a real clamour for mining equities, and some of them, the copper, the pure play copper miners in particular, have done astonishingly well. ETFs more broadly, in terms of opening up this market to the retail market, haven't really taken off in any great degree. Interestingly, the last time there was a real motion to launch industrial metal ETFs was back in kind of 2010-11 when copper prices were all at all-time highs. Wow. And you had the likes of JP Morgan moving to launch a physically backed copper ETF. And yes.
Maybe we see it again. Maybe we see it again now, Mark. It's been great to get your take, and I have been mesmerized by this video as well. Such a soft, malleable, ductile industrial metal. Love looking at copper. Mark Burton there, our metals reporter. Thanks for joining us. Coming up, crypto-linked stocks soar as Bitcoin smashes through another record, topping $23,000 per token. We dig into all the action in that market next. This is Bloomberg.
Welcome back to the European Market Open here on Bloomberg TV. We are 30 minutes into the trading session, of course, and this is where we are on the Stocks Europe 600. Fairly flat, actually, for European equities overall. The FTSE 100 actually eking out some gains, but there's a heavy FX element in there, as you might expect. In terms of which sectors are moving to the up and the downside, we're fairly evenly split, actually. Telecoms, basic resources move higher. The copper price, we've talked about that. That's been going very strongly, and that's lifting some of the mining stocks. To the downside, we have banks and travel and leisure. So there's not a very obvious reopening versus work from home narrative going on today, something a little bit different. Let's get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. The United States is reported to be set to add dozens of Chinese companies to a trade blacklist later today. In total, around 80 additional companies, including top chipmaker SMIC, could be added to the so-called entity list, nearly all of them Chinese. The move by the Trump administration comes little more than a month before President-elect Joe Biden takes over. Bloomberg understands the U.S. Nuclear Weapons Agency was hacked as part of a suspected Russian cyber attack. Hackers with ties to the Russian government are suspected to be behind a well-coordinated breach that took advantage of weaknesses in the U.S. supply chain, striking several federal government agencies. Microsoft confirmed that its systems were also exposed as part of the attack. Michel Barnier says it's the moment of truth. The EU's chief Brexit negotiator has told the European Parliament large obstacles remain to a trade deal with the UK. That's after Prime Minister Boris Johnson spoke with Ursula von der Leyen on Thursday evening. He says negotiations were in a serious situation. Rusal shares fell as much as 10% in Hong Kong today after Bloomberg reported allegations Oleg Deripaska continued to exert control over the company in breach of a US sanctions agreement. European officials are said to have concluded Deripaska retained significant day-to-day influence over Rusal, one of the world's largest aluminium producers. The company strongly refutes the allegations. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura right there in London with a look at your first word news. Now, cryptocurrency exposed stocks soared yesterday as Bitcoin smashed through another record, topping $23,000. The world's largest digital currency has more than tripled in value this year, and some observers, some very wealthy observers who admittedly hold a lot of it as well, are predicting a lot more to come. Joining us now is Mike Belshie, BitGo co-founder and CEO. And Mike, tell us what you do first at BitGo, because I have to say, as someone who's dabbled in cryptocurrencies, the one thing that really, truly keeps me up at night is where to put them so that I can make sure I get access to them later.
Well, we should talk. So thank you for having me. BitGo is a digital asset technology and financial services firm. We're one of the oldest companies that is in the space. We've been around since 2013. And for the last 7 years, we've been focused on building institutional infrastructure. Today, we help large investors get into crypto digital assets safely and securely.
Okay, and so, and what is the target price of either you have in mind, Mike, or if you don't, what are the big investors that you help out? What kind of prices are they talking about? We've been hearing some incredible ones over the last 24 hours, 400,000, for example.
Yeah, that came from Guggenheim, right? But this is not a new trend. The predictions of large, long-term prices of Bitcoin is not new. It's been happening for at least 5-8 years now. Predictions range everywhere from $250,000 a coin up to $1 million a coin. I think it really depends on your time horizon. Obviously, it's a volatile asset. It's a growing asset. It's something that we're having to build new infrastructure to make it all happen, and that takes some time. But long term, most people are looking for a very, very large price from here.
Is Bitcoin a currency or a commodity, Mike?
Well, I guess that depends on who you ask, right? I think from a layman's perspective, it looks a little bit more like a currency, but from a tax and legal standpoint, at this point, it's still a commodity or an asset. So it gets taxed that way. It leads to more confusion. Obviously, people think about it as a currency. You can buy things 24 hours a day, 7 days a week, across the globe at almost no fees. So it looks like a currency, but technically it's probably an asset.
One of my colleagues was showing me a chart that seemed to suggest it's not correlated to very much, Mike, and maybe that's why investors are increasingly looking at it, looking for those uncorrelated asset classes. But we heard from Jeff Curry at Goldman Sachs, who was saying it is correlated with copper and it behaves like a risk-on growth proxy. Is that the way you see it trade right now?
I wouldn't say that at all. I think we're going to find it is uncorrelated. I think in these early days, people look for correlations, and it's hard to tell. But the main thing that's unique about Bitcoin is it's got a level of scarcity that we really don't have in any other market. Even if you're talking about precious metals are mined, right? And there's some endeavors to mine precious metals from asteroids as they fly by, which could happen at some point. Mathematically, Bitcoin is pristine in its scarcity, and so it's got a property that literally no other asset class has. And obviously, the global pandemic is affecting what's going on right now. It's tragic, certainly on a number of levels, and is forcing central banks around the planet to print money at unprecedented levels. And this is making people rethink, how is value going to be preserved in other asset classes, and Bitcoin is immune to the printing of money.
The story, I think it's pretty clear. I love the story of Bitcoin, Mike, and it was great following it from the very beginning. I've always been a little bit personally annoyed by the first dozens and then hundreds and now I'm sure thousands of other digital coins. What are the most serious competitors, though, or alternatives to Bitcoin?
Well, you shouldn't be afraid of it. Actually, software is entering into our global financial system in a way that it's never been here before. Bitcoin is certainly the biggest asset at this point in time. It's found a very good use case, which is store of value, and it's making that work. But it's opened our eyes to the idea that we can actually change money, and we could create a monetary system that has a better set of fairness that brings everybody to a level playing field where individuals and banks operate on the exact same set of rules around the globe. So there's a lot of different projects. People are working on smart contracts, people are working on global remittances, payment systems. All of these things are underway in different forms. Ones that, yes, I think you should look out for. You should look out for what's going on with Ethereum, of course. It's not just an asset itself, but it's a smart contract platform that enables a whole series of other apps. So recently you're hearing about things like DeFi, which is decentralized finance, and really trying to make monetary trading and finance open like it's never been before.
And so what, just so you're specific there, Mike, what is it that is a non-level playing field about the way that the currency markets or, the dollar is used by banks and individuals, if you think that cryptocurrencies are so much better?
Right. Well, banks are a closed system, right? Obviously, the banks have access to it. If you're JP Morgan, you can zip money around the planet pretty quickly. But, we live in a global economy, right? We have outsourced IT jobs all over the planet. We have outsourced manufacturing all over the planet. But if it's a Sunday night and you need to pay a manufacturer to get started on a Monday morning in a country far away, good luck doing that with the existing financial system. But where we're going, yes, you will be able to do that. It's open 24 hours a day, 7 days a week. You can control your money. You can use a bank if you want to. You've got all of the options available to you. And all this is done with transparency that we've never seen before, thanks to the blockchain technology which supports this.
Okay, thanks very much, Mike. Really good to speak to you. Thanks for joining us. Mike Belshie,
Likewise.
BitGo co-founder and CEO. Coming up on the program, home improvements. As people look to upgrade the spaces they're now working and living in, how has the world's biggest furniture store made the shift to online? We hear from IKEA's biggest franchisee next. This is Bloomberg.
we, like I'm sure everybody else, have our B plans and C plans ready. How do we find ways to manage if there would be a temporary disturbance? So I feel that we are fairly ready to whatever may come. And I would say, to be fair, that that challenge is dwarfed by the pandemic, which is totally omni-global challenge for us and everybody.
That was Jesper Brodin, the Inca Group CEO, the largest franchisee of IKEA. Some nice festive sparkly lights in the background. It is that time of year. You can catch more of that exclusive conversation on this week's edition of Bloomberg Green. That airs this weekend on Bloomberg TV and on Quick Take. Now, the UK is leading the way in remote working across Europe. This is according to new research from Deloitte. Nearly 3/4 of British employees would like to work remotely more often in the future, which is 10% higher than any European peers. The consultancy surveyed 10,000 workers across Europe to gauge how COVID-19 had changed attitudes of workers. It found that the UK was adopting the remote working trend even before the pandemic. Let's discuss this then with Will Gosling, partner and human capital lead at Deloitte that did this research. Will, good to speak to you. Just to clarify the research, is it about what people that you survey, what they would like to see happen or what they think will happen? Because the two might be different.
Morning, Anna. Morning, Matt. Thanks very much for having me. Yeah, it's a mix actually. It's a bit of both. I mean, generally, I think it's people's preferences is what we were asking for, and that's kind of how they responded. And you're right. The UK was 10 percentage points higher in employees' desire to want to work from home in some way, a regular format going forward in the future.
I wonder what what it looks like when you ask people. I know that, for example, my friends don't love working at home, but when I ask higher up banking executives, it's fantastic for them. But that's because they have a home office built in their penthouse in Miami Beach. It's much better. So I wonder what the distribution is like when you look across incomes.
Yeah, I mean, it is a real mix. It is a real mix. And I think it's really important that organizations and leaders don't look at their workforce as a kind of one monolithic block. Everyone's experienced this pandemic differently. Everyone has different situations at home, and they have different kind of personality traits. And some people really like working in a remote environment. Some people like it less. I think the challenge to really address here is the degree of what degree of employee choice do organizations allow going forward. Employees clearly are expressing a preference to work from home more. That's what the 10,000 workers we spoke to told us. And we're starting to see organizations make some quite big decisions around their real estate and trying to reduce their real estate, and because they believe that's going to happen. But I think there's also a risk that we kind of snap back to normal. There's a latent desire for people to get back into the office, into the workplace. It's human nature. We're social animals. And I think there's a lot of complexity in managing the workplace between giving employees total choice and controlling access and kind of actually running mixed meetings. We're great at running meetings when they're all at home. We're great at running meetings when we're all in the office or the workplace. It's the mixed model, I think, is going to be a bit of a challenge.
Yeah, that could be. And Will, what do you think is going to be the driving force? I suppose it might be business to business different, but is it going to be the case that the real estate, the need to save costs on real estate dictates this is the space available, therefore these are the options that people have, staff have? Or is it going to be a case of businesses going out and asking those staff, first off, what would you like to do? And then cutting the real estate cloth to fit that? I'm guessing it might be a little more of the former.
Yeah, we're seeing definitely at the moment, and there's some announcements this morning. One of the big advertising agencies I know has announced 20% reduction in its real estate footprint. We're seeing a lot of that. I think some of that was already in flight, and it's just accelerated. Organizations taking opportunity to reduce some costs. What I'm really heartened by also, though, is some other research which we just published, our human capital trends research, where we actually talked to employers and leaders and CEOs in that. We spoke to over 250 CEOs and other business leaders. And what they're saying is actually the number one priority for them is to actually rethink how work is done in their organization, actually reimagine work, and to build resilience and reskilling into their workforce. And I think that points to a desire to do things differently, not just cut costs and cut the real estate, which I'm quite heartened by. If you bring that research together with the research that we talk to the workers, I think there's a bright future, provided organizations seize the moment.
How important is distance then to leaders, Will? I mean, I love England, for example, but I prefer the British Virgin Islands. And if I can work for a London-based firm, you know, sitting on the beach, I think that would be a lot better. Is that okay for employers as well?
Employers are really grappling with this at the moment. I think there's a lot of talks about the death of distance. Technology enables that, and we've proven that throughout the pandemic. And I think within a country, it's certainly easier. Within the UK, for example, I think we will see continued net reverse migration from the cities and a more sort of hub approach. But if we're looking internationally, then it's fraught with issues, particularly around tax establishments that people inadvertently create. And I think managing a much more distributed global workforce like that and maintaining and building social capital is new territory that we're going to have to really look into if we can overcome some of those tax issues.
All right, Will, thanks so much for joining us. Talk a little bit about the future of work. Will Gosling there, Deloitte UK Human Capital Consulting leader. Coming up, CD Projekt is slumping this morning after Sony removed one of the most highly anticipated video games of the year from its store. We'll get the details next on Cyberpunk. This is Bloomberg.
Welcome back to the European Market Open. 51 minutes into a trading session that looks like this. We do have some markets moving to the downside, but in the main, markets recovering some of their momentum as we've gone through the session, now making modest gains. US futures now flat to positive. Let's check in on one of the stories we've been tracking for a while around CD Projekt. The game developer is the biggest loser on the stock 600 this morning. Let's dig into why with Bloomberg's Laura Wright. Laura, what is moving the stock then today? We see it down by just over 15%.
Thanks, Anna. Well, yes, Sony has actually decided to take CD Projekt's game Cyberpunk 2077 off their platform. Cyberpunk was offering refunds to customers. This is all down to technical glitches known in the gaming world as bugs. You know, this was one of the most highly anticipated gaming releases of the year. Analysts were expecting it to sell up to 30 million copies in the first 12 months. You know, in the first pre-release orders, they had already sold 8 million copies. Basically, they didn't pay enough attention to these technical glitches, how they would play out on Xbox and PS4, instead paying too much attention to how it played on PC games.
Yeah, so you actually interviewed the CEO of CD Projekt, Laura, last week. What's led up to this?
Yeah, I spoke with Marcin Iwinski, and I actually asked him directly, was he confident that all these technical glitches could be resolved? And he told me, yes, we are. It comes down to the fact the game was delayed 3 times, in part because it wasn't ready, and then the pandemic struck, which meant that a lot of their staff were working from home. Now, when you're developing a new game, you really need developers in the studios to test out the different models and scenarios, how the game is going to play out. And look, there was even criticism that some of their employees were being asked to work 6-day weeks in the run-up to this game. But importantly, journalists on Metacritic ahead of the release, they ranked the game the 4th best PC game of 2020. But it just seems that enough attention was not put to how this was going to play out on Xbox and PS4.
Laura, thanks very much. Bloomberg's Laura Wright with the background to that market move this morning. Let's check in on the wider market action. European stocks and US futures, as we talked about. Well, in Europe, making some modest gains, relatively flat on European futures right now. That's as the US is reportedly blacklisting dozens of Chinese firms, and US lawmakers continue to wrangle over a federal spending deal in Washington. The dollar pushing higher has been something of a theme, continues to do so. Let's get into a conversation about these markets with the Markets Live team. Christine Aquino joins us now from that team. Christine, it seemed as in the overnight session, the markets in Asia weighed down by what concerns that we weren't going to see stimulus through from the US. We haven't had any resolution on that, and yet European markets and US futures turning more positive. What do you make of things?
Hey, Anna. Yeah, I think, while we haven't gotten a definitive stimulus deal, the hope of a stimulus deal, at least in markets, is still very much alive. I think, this is something that investors might be seeing as short-term hurdles, and that eventually the good news of stimulus is going to be priced in. Whether that actually becomes reality is another question, of course, and I think we're at a juncture now where there's a lot of good news priced on that front in markets. And we may be up for quite a bit of disappointment if that doesn't come to fruition, or if the amount that markets are expecting is going to be less in terms of the stimulus numbers. So we're facing the abyss of stimulus hopes here at the moment, and we could be in for some disappointment here.
What about the question of the day? How much more will the dollar fall in 2020? What are you hearing, Christine?
Yeah, that is quite a bit of a debate, Matt, because we do have an overwhelmingly large number of houses calling for declines in the dollar. I believe Citigroup is thinking a decline of as much as 20% next year. But at the same time, people are also coming to grips with the fact that this short dollar trade is becoming increasingly crowded. I believe Bank of America's client survey for December actually featured that as one of their top most crowded trades, the short dollar. And so investors are increasingly recognizing that this downtrend in the dollar has been spectacularly long, and they are starting to smell signs of a bit of a turnaround into next year. So that could be quite interesting. Big debate there, and time will tell whether the bulls or bears are going to be vindicated on this one.
Thanks very much, Christine Aquino, who leads our Markets Live team in Europe. Yeah, we'll wait to see what happens with the dollar then. We'll wait to see how the stimulus conversation plays out stateside. Matt, of course, the two are linked. Of course, the weekend could be dominated by thinking about Brexit. If you're here in the UK, certainly that's part of the conversation. There seems to be growing expectations that we might get something over the weekend, but, you know, deadlines come and go, as we know in this story.
I will be waiting with bated breath to see what the Brexit deal is. Also, of course, watching on tenterhooks for a U.S. relief package. Realistically, I'll be paying very close attention to the COVID numbers to see if we continue to hit more records. That's it for the European Open. This is Bloomberg.
China's top chip maker slides after a report that the United States is set to blacklist scores of more Chinese companies, while U.S. equity index futures dip. Another shot, Moderna's vaccine wins the backing of FDA advisors. U.S. lawmakers continue to debate over a bipartisan stimulus deal. And Boris Johnson says Brexit talks are in a serious situation after phoning Ursula von der Leyen. Still, officials in Brussels are confident of a breakthrough. Michel Barnier says it's the moment of truth. Well, Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the market's definitely focusing on a possible Brexit or possible no-deal Brexit. They're focusing on stimulus in the U.S. We hit a couple of snags with that. And then, of course, there's a bit of repositioning as it is the last Friday of 2020, working Friday, as next Friday, it's Christmas Day. Now, IFO December German business confidence also at 92.1, a touch better than estimates. Remember, I think the December figures don't actually take into account the latest lockdown in Germany. So just take it with a pinch of salt, but it gives us a good indication of what we were feeling before this wave hit us again. Euro dollar 122.60 and then pound 135.41. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Michel Barnier says it's the moment of truth. The EU's chief Brexit negotiator has told the European Parliament large obstacles remain to a trade deal with the UK. This after Prime Minister Boris Johnson spoke with Ursula von der Leyen on Thursday evening. He says the negotiations were in a serious situation. Now, Bloomberg understands the U.S. Nuclear Weapons Agency was hacked as part of a suspected Russian cyber attack. Hackers with ties to the Russian government are believed to be behind a well-coordinated breach that took advantage of weaknesses in the U.S. supply chain, striking several federal government agencies. Microsoft confirmed that its systems were also exposed as part of the attack. And Rusal shares fell as much as 10% in Hong Kong today after Bloomberg reported allegations Oleg Deripaska continued to exert control over the company in breach of a U.S. sanctions agreement. European officials are said to have concluded Deripaska retained significant day-to-day influence over Rusal, one of the world's largest aluminium producers. The company strongly refutes these allegations. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the U.S. is set to add dozens of Chinese companies to a trade blacklist, including the country's top chip maker, SMIC. Now, that's according to a report from Reuters. The move is seen as a bid by President Donald Trump to cement his tough China stance before leaving office. Well, joining us now to discuss all of this is John Liu. He's our Greater China editor. John, how much of a surprise would it come if we have, this company, SMIC, plus 11 others being hit and on a blacklist?
It won't be much of a surprise, unfortunately. Just earlier this month, SMIC was put on a list by the Pentagon of companies identified as having been or are being owned by the Chinese military. That's something that SMIC has denied. But it sort of is the latest step in a series of things that President Trump has done to sort of escalate tensions with China in the waning days of his administration.
John, what's the thinking in China? Does the Biden administration come in and look at the blacklist and possibly reverse them, or does it really box in the new administration?
I think in Beijing right now, the stance is let's wait and see. I mean, I think everybody in the Chinese government is trying to be restrained in how Beijing reacts to the things that Trump is doing before he leaves office. And I think there is a bit of optimism that when Biden comes in, the situation will change and there will be a bit more stability in the relationship between the two countries.
Great. Thanks so much, John Liu, there, our Greater China editor. Now, joining us this morning to talk, of course, about all of the global trade, all of the China story is Salman Ahmed. He's Global Head of Macro and Strategic Asset Allocation at Fidelity International. Salman, thank you for joining us. A lot of questions on trade, especially between the U.S. and China. But overall, what do you see as the biggest risk to markets in 2021?
Good morning, Francine. I think China-U.S. decoupling is the direction of journey, and I think probably becomes a bit more slower going forward, but certainly the direction is clear. But from a immediate risk perspective, there's one risk we are thinking about a lot is a potential credibility check to central bank, the DM or developed market central bank's ultra easy policy. So we saw the ECB provide a commitment to continue the PEP program well into 2022, we saw something similar from the Fed, which was a bit more outcome-based commitments, but again, commitment to do a lot of QE going forward. The question in our minds is that if recovery takes hold and inflation comes back from very low levels currently, then how will the market respond to this very ultra easy policy? So we are not there yet, but it's going to be an important risk factor to watch in 2021.
Salman, what does it mean for the markets? What will it take for actually the markets to correct at these levels? Or as long as central banks stay put, does it not make much of a difference?
Central bank policy support is critical and has been one of the major reasons we are seeing obviously a very strong equity market. And that's which goes back to the real rates argument, which is that right now real rates are negative and very, very depressed. And if anything changes that setup, then I think that's where a potential risk factor comes through to risky assets and equities equities specifically. But right now, it's a lot of liquidity, commitment to do a lot of liquidity, and that means that real rates are so negative, which is helping, of course, equity markets to rally, continue to rally.
Salman, what's your best play for 2021?
So in terms of our best play, so we are pro-risk right now. We are focused more on Europe and selectively in emerging markets. We know there is a consensus building around those themes, but there are valuation buffers to those themes, and at the same time, both these regions have shown to be very sensitive to the reopening theme. And the fact that we think that the ECB, for example, has a more stronger reason to keep policy easy rather than the Fed, can also differentiate versus the US stock market. So we are focused on pro-risk on equities and very selectively in EM, which we think that can outperform US markets next year.
Salman, when you look at, I guess, some of the big unknowns with US-China, are we expecting too much of a Biden administration? What's the risk that actually they underwhelm on trade, and so we have to revisit our GDP forecasts?
Well, on U.S.-China and Biden administration, I think I think both the Trump administration and the Biden administration agrees on China and the way they are looking at it. Of course, the multilateral approach, which President-elect Biden has been discussing, is slow-moving by definition, and that's where there is some cover. At least in the short term, that this issue does not become much worse and difficult to handle. But the directional journey and the medium-term trend is that the two economic superpowers will continue to diverge and decouple. And we have seen some specific examples of that. And technology sector is going to be important in that regard. So from a macro perspective, I guess the risks have come down. But from a sector and single name perspective, I think the risks are still live and probably may continue going forward.
Great, Salman. Thanks so much. Salman Ahmed there from Fidelity International stays with us. Now, coming up, the UK warns Brexit negotiations are blocked as officials race against the clock to reach a deal. We discuss that next, and this is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Moderna's COVID vaccine has won backing from a panel of experts who advise U.S. regulators. Food and Drug Administration advisors voted 20-0 with one abstention that the benefits of the vaccine do outweigh any risk. It sets the stage for the Moderna jab to be the second vaccine cleared over in the U.S. Now, a group of U.S. states has filed an antitrust lawsuit against Google, the third in just 2 months. The lawsuit accuses the search giant of illegally monopolizing internet searches and search advertising. It alleges the company used a series of anti-competitive contracts, hurting consumers and advertisers in the process. Google says it's improved search results in ways that many regulators had previously deemed pro-competitive. And Credit Suisse and one of its former managers has been charged by Swiss prosecutors over an alleged failure to prevent money laundering by a Bulgarian drug ring. The case has been running for 12 years and relates to the sale of real estate in Switzerland and Bulgaria. Credit Suisse says it notes the decision with, quote, astonishment, and says it will vigorously defend all of the allegations. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the UK has warned that Brexit talks are blocked as time to reach a deal runs out. Leaders on both sides cast a doubt on a potential agreement, saying that big differences remain on fishing rights. While addressing the European Parliament earlier this morning, the EU chief Brexit negotiator Michel Barnier sounded a cautious note.
Nous sommes à un moment de vérité. It's the moment of truth. We have very little time remaining, just a few hours, to work through these negotiations in a useful fashion if we want this agreement to enter into force on the 1st of January.
Well, joining us now for more is Edward Evans, who leads our Brexit coverage. Ed, instead of asking you whether we get a deal or no deal, what I want to know is if we get a deal, when does Parliament vote on it?
Well, that's an open question. It could be at any point between now and December 31st. The European Parliament has said it wants the deal by Sunday so it can vote on it, so it can be ratified in time for December 31st. The UK Parliament theoretically could approve a Brexit deal in a day. In practice, it would take longer. And you've seen the government say to MPs, look, Parliament could be recalled at any time between now and, well, the New Year to approve a deal. So you could conceivably see a vote in Parliament between Christmas and New Year.
Yeah, so cancel your holiday if you're a trader and you're trading pound. Edward, overall, how much difference is there actually between the two sides? I know, it's also about state aid, it's about fisheries. They say that substantial differences remain, but are we likely to have a deal?
Well, I think you've got to distinguish between the political rhetoric at one level and what is actually going on in the room. Now, obviously, we've had downbeat assessments from both Boris Johnson and Ursula von der Leyen, but people close to the talks say that's only to be expected at this stage in the talks. Both sides still want to get big concessions out of the other, and that they need to manage expectations at home. Johnson has his own backbenchers to appease, his Eurosceptic backbenchers, and in Brussels, Ursula von der Leyen got to persuade France and other coastal states that she's getting a strong deal for the EU on fishing. If you look at the actual points of disagreement, almost all of the deal is there, but it's boiling down to a disagreement on the level playing field, on one level, and that is certainly getting closer. But, and this is a big but, they are still some distance apart on fishing, and that is what this deal is going to come down to. If they can get a deal together on fishing, they can get to the wider trade deal. And it's not certain, not absolutely clear that they will here, and that Boris Johnson may not be bluffing when he talks about this.
Ed, very quickly, does it make a difference that the French president has COVID?
Not clear on that. I mean, the French government's position on that is pretty strong and pretty consistent on it. And France is not alone on seeking a very strong position on fishing. Look at Ireland, look at the Netherlands as well. That said, there is a distinction on the EU side between those coastal states and the rest of the bloc who might actually want to deal rather more than they care about fishing industry.
And remove up to 100% of makeup.
Great, thank you so much, Edward Evans there, who's also cancelled Christmas. These are Brexit coverage. Still with us, Salman Ahmed from Fidelity International. Salman, there's definitely Brexit fatigue. There's probably pound trading fatigue. Is this a very UK problem, or is there a wider implication of, if we get a no deal, what it means for financial stability and what it means for Europeans on that side?
I think, Francine, it's becoming really a sterling problem. I would say not even a UK problem, because I think Bank of England has come down with very clear communication that in case of no deal, they will provide liquidity. The Governor Bailey has been talking about this as well. So that has been important to give confidence to the market that they won't have liquidity accidents because of this shock, if you will. So right now the sensitivity is coming through sterling, and we also notice from our analysis that the sensitivity of sterling to Brexit developments is also coming down. So it's becoming a more of a concentrated issue right now, because I think longer term the difference between a thin FTA and a no deal is not much. It's really in Q1 as frictions come through. In case of a no deal situation or scenario, that's where the hit comes through. But I think given the fact that Bank of England has been very clear, I think that gives confidence to the marketplace that liquidity will be available and ample. So that has mitigated some of those very negative scenarios which were problematic a few years ago.
Salman, what do you do with some of the solvency warnings that we've had in various parts of the economy, and also that G30 paper from Mario Draghi? Are you worried about companies going bankrupt, or are you worried about the governments of the world propping up companies that really shouldn't be viable?
I think the very high debt ratios, in fact, the very rapid increase in debt after the pandemic shock struck us in March, April, is probably the most important macro legacy of the pandemic, and it's going to stay here even after the vaccine is deployed. And I think the flip side of that very high debt ratio is that the public sector rightly had to support the private sector and the corporate sector. And that's where the critical question will come through, is that how does government intervention in the wider economy pans out going forward? Because if this support is towards companies which should not exist, which is the stopping creative destruction, then the point Mr. Draghi makes is that you will have a shock to productivity, and that's what is really needed to make this debt sustainable in the long term. And I think it also links back to the fact that central banks may not be able to exit from their very easy policies because of this very high debt ratio. So this complexity is just starting, and it's probably going to become much more clearer once the vaccine is deployed.
Salman, do you have worries about how the vaccine is deployed, or is there a false hope that actually the vaccine will, give a boost to GDP too quickly?
I think there is differentiation between countries. First of all, there's no doubt about that. And then in survey data, I've seen, as you may have noticed, that there are issues in the DM world when it comes to willingness to take vaccines. I think we are also seeing that education campaigns are ramping up. The private sector, for example, is taking a very important role in supporting the vaccine deployment. So this thing can change, and we are optimistic that a positive and honest message about vaccines and safety of vaccine can be deployed and can help the adoption, but we'll have to watch this risk very carefully from Q1 onwards. But I think base case right now for us is that 2021 H2 sees the big ramp up in recovery as the reopening happens, but we'll be watching, of course, the adoption very, very closely to make sure that those estimates are still in line or not.
Salman, what do you do with Bitcoin, if anything?
On Bitcoin, I think this year, a couple of things, observations I can make is that there is now more institutional participation in Bitcoin. There has been now much more buildup of supporting infrastructure, like, for example, custodial arrangements in Bitcoin. I think the perennial debate whether you should go for gold or Bitcoin, I think will remain with us. But from a more strategic asset allocation perspective and from a more diversification perspective, there is need for a gold-like asset in your portfolio, given the fact that these monetary policies, the fact that debt is so high, and the points you mentioned about Mario Draghi's paper, these are experimental policies. There is no historical or strong historical precedent for these policy mentality and policy mixes. So this thing can go wrong, and that's why I think there is scope for a diversifier, a true diversifier in your portfolio, and we do focus on gold from that perspective.
Salman, thanks so much. Salman Ahmed, their Global Head of Macro and Strategic Asset Allocation at Fidelity International. Now, coming up, crypto-linked stocks soar as Bitcoin smashes through another record topping 23,000 per token. We dig into all of the market action later in the program. This is Bloomberg.
Mixes, so this thing can go wrong, and that's
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. The market's focused on Brexit. The market focused on stimulus in the US. Neither are a done deal. So we look at negotiations to see what happens in the next couple of hours. Certainly, European stocks are steady, pound sliding on concern about Brexit. If you look at the dollar, definitely benefiting from declines in other G10 currencies. I'm also looking at some of the other things that we should be looking at almost on a daily basis. One of them is Bitcoin. Again, if you look at the clock ticking with the new pandemic aid, leaders in Washington are under pressure to resolve their differences after months of deadlock. If we don't get a stimulus package, it could be hurtful for some of the equities in the U.S. Now, coming up, joining the IPO rush, we speak to Makram Azar, the chief executive of Golden Falcon, which goes public today on the NYSE. That's coming up next, and this is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, the Golden Falcon SPAC is going public today on the NYSE, and it's looking to raise $300 million. Our next guest is setting up the blank check company to pursue deals in telecommunication, media, and technology sectors. And we're delighted to be joined by the Chief Executive and Director of Golden Falcon Acquisition. He's Makram Azar. Makram, thank you for joining us. This is an exciting day for you, and so congratulations. If you look at the TMT space, where do you find value? Where do you see the best opportunities in the next 12 months and then 2 years?
Good morning, Francine, and thank you for having me on your program. It's an exciting day for us. Yes, we start trading later today on the New York Stock Exchange. We see a huge opportunity in TMT in Europe in particular. As you probably know, there's so many highly qualified TMT unicorns in Europe, including in the UK. There are around 20 in the UK, another 20 between France and Germany. and all of them are what I call European champions that would make a lot of sense to list on the New York Stock Exchange and give them access to the capital markets. As you know, in certain subsectors, let's say verticals such as fintech and digital banking, the UK and Europe are even more advanced than the US in lots of ways. And we believe those companies deserve to have great access to the capital markets, and the most attractive capital markets, as you well know, is the US market. And we want to give them that opportunity to list on the New York Stock Exchange, just like some of the champions already listed there, such as Spotify or Farfetch or IHS Market, etc. So we see tremendous opportunity, particularly after the pandemic, because those are the companies that have done well and accelerated their growth during the pandemic, and we can offer them to take advantage of that.
Makram, can you give me a couple of examples of where you've talked about these unicorns in Europe and in the UK, but what subgroup do you think will do very well in the coming couple of years because of the trends that we've seen, maybe related to the pandemic?
Yeah. Unfortunately, for legal reasons, I can't give precise names, but you live in the UK, so you probably know a lot of those names, in digital banking and fintech, but also in media on the continent as well. There are a whole number of very attractive companies. Again, I gave the example of Spotify and Farfetch, who already listed on the New York Stock Exchange. So those, if you will, represent illustrative examples of very strong European champions who already have a presence in the US or an ambition to grow in the US. And through the transatlantic team that we have put together, a very deep bench, we can help them not only list on the New York Stock Exchange, but also expand into the US market, which would be very attractive to them. Because for all of them, or most of them, the US market is obviously the holy grail. They have reached, a good market share in Europe and the UK, but, the US has much more potential, and we can help them expand there, both organically and through acquisitions.
So you were among the first group of European investors to actually set up a SPAC. How has uptake been with investors? Are they excited about it? Were there many questions or reticence?
To be honest, I don't want to sound pretentious, but we have had overwhelming support. We were massively oversubscribed, and that's why we decided to raise our size last night. So the investors were very supportive, and we really thank them, and we're very appreciative of that. But to be honest, obviously they are supporting the team, but they also see the tremendous opportunity, particularly in Europe. There were 237 SPACs raised in the US so far this year. There were only 2 with a focus on Europe. So it's really, and those 2 are not in sectors that are relevant for us. So, we have a first mover advantage. We have a great story. They believe in our story, and I think it's really a validation of our thesis to see so much support from investors. Most of them are, the bluest chips investors on both sides of the Atlantic.
Makram, do you worry that actually there's going to be, more European investors going into these kind of vehicles, into SPACs? And are you worried that the market could be overcrowded very, very soon? You
mean in Europe, having more SPACs in Europe? Is that what you mean?
Yes. Or more SPACs by European investors?
Yeah, I think European investors still account for a small portion, unfortunately, of the US SPAC, of the SPAC market in general. I think you need to build the whole ecosystem around SPACs to develop, positively, like they've done in the US, but it hasn't arrived to Europe yet. What I think will happen, though, is this tsunami that started in the US in April this year will reach our shores. I mean, it has started to come here. We have a first mover advantage. We're at the cusp of it, but many will follow, and that's a good thing for Europe, because in the whole of Europe, there are 60 TMT unicorns. So we can only do one, unfortunately. And so, others will follow, and they're welcome. But we're not worried about that, because we have built the deepest bench of any SPAC on either side of the Atlantic, in terms of not just the management team, but also our prominent board of directors. You probably have seen the likes of Xavier Rollet, who was CEO of the London Stock Exchange, or Dominique Dinin, who's chairman of Eutelsat. So our board, and as well as our strategic advisory group, which is another differentiator that we have put together, can add a lot of value to the unicorns and the European champions who would be attracted to our proposition of listing in the US, and also expanding further into the US market from a business and operational standpoint. So we're not worried about others who might copy us, because the opportunity is huge. And I think there was a conference last week by a European bank where they estimated that over the next couple of years, the European SPAC market will account for a third of the US. So there are only two for now. US at 237, so you can see the potential.
Makram, maybe two final questions. First of all, when are you expecting to do your first acquisition? Do you have a target of a timeline for that? And how big do you want that acquisition to be?
Yes, so the US SPAC market is very regulated. We're regulated by the SEC, so we can't engage with the targets until we have closed our IPO, which will be on Tuesday next week. After that, we're going to engage with the business owners and the entrepreneurs that we know well, that we have built relationships with over the last 20, 30 years over here in Europe. And as a result of that, we are very confident that we should be able to bring to market an attractive candidate over the next several months, I would say. I don't want to be more specific, but in the first few months of the new year, fingers crossed.
Can you give me a sense of why you actually decided to go for it in the US? Or is there something that was lacking or not good enough in the UK and Europe?
Yes, absolutely. By the way, you asked me on size, and on size, it's we're looking for companies, as I mentioned, unicorn, which means over $1 billion in valuation. Europe, yes, for two reasons. So for Europe, the structure, if you will, of SPACs in Europe, they've existed for a long time, but they're not as efficient as the US, what they call the 2.0 SPAC structure of the US that got developed over the last couple of years, has been fine-tuned and is much more investor-friendly. And that's why you saw this, really frenzy, if you will, since April on the other side of the Atlantic. So we wanted to tap into that. But more importantly, because we strongly believe that listing a European champion in the US makes more sense than listing them on a small exchange in Europe. Again, there are so many precedents. I mentioned three already, but there are 200 European companies that chose to list in the US over the last 10 years. And again, we believe it's more than an exchange. You need an ecosystem, and the US has the deepest capital pool, the most sophisticated investor base, the broadest research following. That's where the comparable companies that they're going to be benchmarked against are based. So for all these reasons, we think the US makes more sense. And maybe I'll give you a more compelling one even, which is that Europe is much more skewed towards your value stocks, the old economy, healthcare and energy and banks, etc. Technology, unfortunately, only accounts for 7% of the FTSE 100 and 7% of the Eurostoxx 600, whilst it accounts, as you well know, for 50% of NASDAQ and 28% of the S&P. And the result of that is that almost all European indices, including the UK, are still in negative territory this year. The FTSE is down 14%. Yeah. NASDAQ is up 42%. So if you are, let's say, a successful entrepreneur, you built a lot of value in your company, and you want to list on a stock exchange, where would you rather go? Where it's down 17% or 14%, or where it's up 50%? I think it's pretty obvious where they would choose to go, and that's why we decided on the New York Stock Exchange.
Wonderful. Thank you so much for your time. Makram Azar there, the Chief Executive and Director of Golden Falcon Acquisition. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The United States is reported to be set to add dozens of Chinese companies to a trade blacklist later today. In total, around 80 additional companies, including top chip maker SMIC, could be added to the so-called entity list, nearly all of them Chinese. The move by the Trump administration comes little more than a month before President-elect Joe Biden does take over. Now, Michel Barnier says it's the moment of truth. The EU's chief Brexit negotiator has told the European Parliament large obstacles remain to a trade deal with the UK. This after Prime Minister Boris Johnson spoke with Ursula von der Leyen on Thursday evening. He says negotiations were in a serious situation. Moderna's COVID vaccine has won the backing from a panel of experts who advise US regulators. Food and Drug Administration advisors voted 20-0 with one abstention that the benefits of the vaccine do outweigh any risk. It sets a stage for the Moderna shot to be the second vaccine cleared over in the US. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Microsoft is said to have been hacked as part of a suspected Russian campaign that's hit several U.S. government agencies, including the National Nuclear Security Administration. Sources say the attack took advantage of the widespread use of software from a company called SolarWinds. Now, let's get the details from our reporter, Bruce Einhorn. Bruce, how serious is actually this latest development?
It's serious, and the more we learn about it, it seems like it's getting worse. So far, we know that there have been 3 state governments, local governments, U.S. Departments of State, Treasury, Commerce, Homeland Security. We know the Energy Department and its National Nuclear Security Administration, which is in charge of securing the nation's nuclear weapons and material, as well as Microsoft and other companies. So, yeah, it's pretty widespread.
Are the victims all American?
They're overwhelmingly American, but there are other countries that also have companies that have been breached. So among those are Canada, Mexico, the UK, and several others, according to Microsoft.
So how long do we know, Bruce, this could have potentially been going on?
Well, it seems that the original hack dates back to March, and so it's possible that the hackers have been foraging through systems for almost 9 months and potentially leaving a lot of malware, doing other things. We're really only, at this point, can speculate on just how much damage they did.
All right, Bruce, thanks so much. Bruce Einhorn there with a very important story. Now, coming up, home improvements as people look to upgrade the spaces they're now working and living in. How has the world's biggest furniture store made the shift to online? We hear from IKEA's biggest franchisee later in the program. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, property investors are about to find out just how hard the COVID-19 pandemic is going to hit their bottom lines. While buildings sat deserted in city centers and millions of office workers worked from home, we've taken a closer look at the data. Now, using an AI model, our reporters have scoured more than 4,500 earnings transcripts between July 21st and December 8th. And they found that hundreds of executives addressed the urgency to cut real estate costs. Well, joining us now is our European real estate team leader. He is Jack Sitters. Jack, great to have you on the program. I mean, it's a really fascinating story. In which sectors are companies actually most likely to be talking about real estate cuts?
Thanks. Yeah, well, when we set out on this exercise, I think what I'd expected was to find lots of retailers, lots of restaurateurs, businesses in the hospitality sector that have obviously been really hard hit, talking about store closures and so forth. And, we did find a huge amount of that. But we also found businesses in a really broad range of sectors talking about it, whether it was finance, media, tech, even oil and gas, right across the economy. And it was really striking, and again, not just stores and restaurants or offices, but even things, and also just completely globally.
Jack, is this a temporary pullback, or will these changes actually be permanent?
So I think that there's a couple of different things going on here. You've obviously got the cyclical impact of the shutdowns, of what's obviously a very, very severe recession around the world, and that's causing a lot of focus on cost cutting generally, and real estate is a big part of that. But then you've got the probably the more interesting side of it, which is the structural changes. So we've all been through this bizarre 9-month experiment now of home working, and companies are really grappling with these questions of, okay, how much of this stays, how much of this goes. It's been a raging debate for several months now, but I think what these calls reveal is that CFOs.
Morning, ladies and gentlemen. I'm going to place an order to sell short euro. The price I'm looking 122.53.5. Yep. Okay, let's wait. It will reach the level I'm looking for to sell euro.
Income profile you can get from real estate, and very secure income, a really nice diversifier from, fixed income and so on. But what the pandemic has done is it's really raised the question about just how secure a lot of that income is. You had buildings that were rented to, very well capitalized businesses on long leases that suddenly were unable, or in some cases unwilling, to pay their rent. And that poses a really sort of fundamental question to these institutional investors who rely on real estate for that security of income. Now, on the flip side of that, you've obviously got incredibly anemic returns in other asset classes, particularly fixed income being the obvious one. And so the sort of spread between government bond yields and real estate is actually really attractive by comparison. So I think what you might see is a real kind of recycling within real estate. You already see that with investors coming out of physical retail and investing into warehouses, to play that e-commerce boom. I suspect you'll start to see much more of that in other parts of real estate as well, so offices and so forth.
Great. Thank you so much. Jack Sitters there from our European real estate team. Now, coming up, crypto-linked stocks soar as Bitcoin smashes through another record. We'll talk crypto next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's talk crypto. Cryptocurrency exposed stocks soared yesterday as Bitcoin smashed through another record, topping $23,000. Now, the world's largest digital currency has more than tripled in value this year, and some observers predict more to come. Well, joining us now is Eddie van der Walt. He's Bloomberg MLive European strategist. Eddie, I was going to talk to you about the Stoic philosophy, but that's for a conversation on Twitter. When you look at Bitcoin, does it actually, could it rival gold? Is it the new gold 2.0?
Look, everybody's asking that question. I think it's too early to say that. I think right now, Bitcoin is the pretender to the throne. It would like to grow up to someday be gold 2.0, but it is not that quite yet. At the moment, it's not a store of value. It certainly has no link to inflation or a reliable inverse correlation to the dollar, both of which gold usually offers. So I think gold, Bitcoin has some way to go before it replaces gold. Right now, Bitcoin is a bet that it will at some point grow up to be a store of wealth.
Eddie, who's buying it? Is it retail investors, institutional investors?
I think that's the big question right here. I think, two things have happened. Supply has been pinched off. Earlier this year, we saw a halvening in supply, which is something that's written into the Bitcoin algorithm, which has helped push prices up. But I think on the back of that, we have seen the old guard, the young trader types come in and buy Bitcoin, but we're also seeing the wealthy come in and buy a lot of Bitcoin. It was a beautiful story from Ed Robinson earlier this week, who said, who talked to family offices, and that's the classic portfolio, the one that can take on a lot of risk, the one that is overfunded and a long time before the next liability becomes mature. I think those are the kinds of portfolios that can buy it. So yes, wealthy investors and institutions.
Eddie, I know we want to talk about volatility and whether it just rallies and then crashes and then rallies again, but have you seen anything like it? There's so much love for Bitcoin and there's also so much hate. It's really polarizing.
Oh, it absolutely is. I think the strange thing is that most people, even the people who are buying into it right now, they don't have a clear investment case for what the blockchain and Bitcoin and this technology is going to do down the line. All we clearly can say as an investment community is that there are people out there who are willing to buy it, they are willing to withstand the volatility, and that does make it a secure investment.
Well, it takes a long time to execute the order, so basically I will have to cancel and wait for better time. The order to sell short euro was cancelled.
He thinks it's going to go to 400,000 in a straight line. I think people accept that this asset class rallies spectacularly and crashes spectacularly. Now, we've had a good run up this year. I actually think that some of the alternative coins, Ethereum, those sorts of things, they tend to lag Bitcoin, but then they tend to be higher beta on the way up and higher beta on the way down, it has to be said. And then there are other routes. I mean, we heard from Coinbase talking about an IPO. We heard companies like AMD. You know me, I'm from a mining background, and the video cards that are used to create this stuff, I think that's the interesting route into cryptocurrencies.
Yeah, thanks so much, Eddie van der Walt there from MLive. More Bloomberg Surveillance is next. Tom Keene joins me out of New York.
of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
China's top chip maker slides after a report that the U.S. is set to blacklist scores more Chinese companies. U.S. futures in the green after a slight dip. Another shot, Moderna's vaccine wins the backing of FDA advisors. U.S. lawmakers continue debate over a bipartisan stimulus deal. And Boris Johnson says Brexit talks are in a serious situation after phoning Ursula von der Leyen. Still, officials in Brussels are confident of a breakthrough, and Michel Barnier says it's the moment of truth. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Tom Francine from London and New York. Tom, I know today you're eager for a Brexit update. What I would say is a lot of traders that are looking at cable and sterling are actually canceling Christmas plans, because if we have a deal, it will have to, go through the House of Commons, and so we could see movement next week or even the week after.
It is just a most unusual 2020. It is a most unusual holiday season. We're supposed to be sliding into the holiday week here, Francine, and there's none of that. As you know, Brexit, a world turned upside down. Maria Tadeo scheduled to darken our door out of the chaos of Brussels. And I'll tell you, Francine, this stimulus bill in the United States, here's what you need to know waking up early in America or even in Europe. It was turned upside down late yesterday afternoon and into the evening. Francine, they're going to be working in Washington, it appears, through the weekend, like every minute of the weekend. It's on the edge of Brexit.
I was going to say that, actually. We started Monday by saying, we're close to a deal on stimulus,
exactly.
We're close to a deal on Brexit. 5 days afterwards, the clock is ticking, we're nearing deadlines, and we're still at the same point. They're still negotiating, and nothing's a done deal. So, good parallels. We'll talk about both. Now let's get straight to the Bloomberg. First word news in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, the U.S. is on the verge of having a second coronavirus vaccine approved. A panel of outside experts who advise regulators has given its okay to a vaccine made by Moderna. The Food and Drug Administration could authorize the shot today. The vaccine showed a high rate of effectiveness in late-stage trials. The U.S. government faces the prospect of a partial weekend shutdown. That's according to the Senate number 2 Republican John Thune. Top leaders in both parties are working to complete a coronavirus relief deal that's tied to a giant government spending measure. Thune says some senators opposed to parts of the relief bill may not go along with another funding extension, which could lead to a shutdown. The U.S. reportedly is set to blacklist dozens of Chinese companies. Reuters says one of them is the country's top chip maker, Semiconductor Manufacturer International. President Trump is said to have a list of about 80 more countries that will be denied access to U.S. technology. And the UK's chief negotiator warns that time is running out to reach a trade agreement with the European Union. And British Prime Minister Boris Johnson says talks will fail unless the EU backs off its stand on fishing rights. Behind the scenes, though, officials say the talks are progressing and negative language can be just a negotiating ploy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Greatly appreciated. Equities, bonds, currencies, commodities. You know what? I got one screen today. When was the last time I had that? Somnolent markets out there. Futures with a little bit of a lift in a market that refuses to correct or go down in any way, shape, or form? Francine mentioned sterling. Well, I'm going to let her talk about a 135 sterling D. Just a churn to the market. I don't have much to say other than the major story of the week is inflation expectations in the United States continue to drift higher, and the real yield now negative 1.0339 gets my attention. Francine?
Actually, Tom, I read this amazing note by UniCredit yesterday about inflation expectations in the U.S. and how, and this was by Marco Valli of UniCredit, saying that it's almost impossible for QE alone to get up inflation expectations. Now, European stocks are pretty much fluctuating again. Traders trying to see the latest, UK EU negotiations to hash out this free trade agreement. The Brexit talks are still stalled, and pound is actually falling. I mean, we keep on talking about another snag being hit just a few hours before we were meant to find a deal on Brexit. So that's hitting Brexit's pound, and then it's also going back to what you're talking about with negotiations in the U.S. about stimulus. The dollar rising, benefit from declines in the group of G10 currencies. Copper actually topping 8,000 a ton for the first time in more than 7 years, and then Bitcoin. It's not a fright if we don't look at Bitcoin, 23,156. Now, tensions high as time runs out to reach a post-Brexit trade deal. Leaders on both sides cast doubt on a potential agreement, saying that big differences remain on fishing rates.
Nous sommes à un moment de vérité. It's the moment of truth. We have very little time remaining, just a few hours, to work through these negotiations in a useful fashion if we want this agreement to enter into force on the 1st of January.
Joining us now is Jim O'Neill, Chatham House Chair. Jim, good morning. I know we have a number of things to talk to you about. On Brexit, a lot of traders are probably saturated with this constant, we're close to a deal, we're not close to a deal. But how much of this is political meandering for domestic audience, and will they actually get a deal?
We're not just skip this bit on Brexit, Francine and Tom. I mean,
and go to stimulus in the US, because that's going great.
I listened to your intro. I mean, it's like there's some kind of competition going on amongst the backroom players to see who could have the most. Maybe it's a new version of Christmas panto, that because pantomimes are being cancelled with COVID, that the negotiators in both Washington and Brussels are trying to, create the same kind of theatre. But I've now got to the point where I'm trying hard to not follow what any particular person says. But the very fact that both in Washington and in Brussels they agreed to carry on talking suggests to me we're going to get a deal in both places.
But Jim, the I don't know, unintended consequences of leaving it to the 11th hour, and I'm just trying to put my thoughts together. Could it lead to more populism as people look at this and say, look, my elites are actually frankly rubbish at doing this. I mean, they can't even negotiate anything. We're now 6 working days from Brexit. What happens in the U.S. stimulus? Like, is there going to be a generational shift on how we're expecting our politicians to negotiate?
Maybe, but I think certainly my experience of both is that, it's not the first time this sort of thing happens, and the broader point is because of the circumstances and the utter chaos going on with COVID spread, and especially here in the UK in terms of trying to understand what the guidance and rules are. It's probably not getting a lot of attention. You listen to mainstream British radio this morning, and this wasn't a top story. And in a normal situation, of course, it would be the only story. So I'm not sure a lot of people would necessarily conclude that. But obviously, if it carries on, I'll throw in this. One thing I wouldn't dismiss now is that we end up with seemingly no deal by the end of the year. Everything looks like it's going to collapse. And then, surprise, surprise, by the end of the first week of January, there's some emergency meeting and we end up with a deal then. I mean, it wouldn't be the first time such utter chaos has happened involving the EU, never mind the sort of odd stance of us here in the UK.
Jim O'Neill, on a deal, are you talking about Man U and Pogba, or are you talking about Brexit? I'm confused here, which it is. Jim O'Neill, what we have is a recession. We have a massive output gap based on a natural disaster. And around Brexit, I find startling how no one's paying attention to pound sterling. What would you presume would be the decision tree of pound sterling off of these talks?
So I think, as always, there's various things going on at the same time. And the fact that the dollar is weakening in general, and the pound starts from at least notionally a somewhat undervalued level relative to other currencies, I think there's a lot of investors out there that think that there's not major downside for the pound, famous last words. And actually, if there was a deal, and if we get particularly the Oxford vaccine approved, and so you can accelerate the speed in which UK people get vaccinated, I think there's quite a lot of people out there that think the pound could rally significantly from here next year. And I have to say, I wouldn't disagree with that. I think it's quite feasible to see a path of the pound going into the high 140s, assuming that you do get a deal at some stage and we start to vaccinate a lot more people in the UK, because then the UK economy will have a significant bounce in 2021.
So much of the fears that I sense is someone very distant from this debate centers around your public service as commercial secretary. Speak to the people of the United Kingdom now about what's not in the media, not in this hysteria, about what it actually means for the ports, the truck depots, and the rest, the commercial nature of United Kingdom business if and when there's finally a deal. All right, do you have a confidence business executes the following Wednesday?
Well, in that sense, in the real world, I mean, I'm just very pleased that I'm not running one of those businesses, particularly a smaller one where you don't have a lot of admin and technical staff that can do detailed alternative planning, because how businesses are supposed to consider the range of alternatives that could be possibly governing their ability to get things through, whether it be coming in or going out of the UK this time in another 3 weeks. I don't envy them, and I feel for them. And it does surprise me that political leaders in Brussels, Paris, Berlin and London aren't more cognizant of the kind of staggering challenges that real normal people are having to deal with here. That makes it all very unfair.
Thank you so much, Jim O'Neill, the Chatham House chair. He stays with us. We have many, many other questions for Jim. Now, coming up, Helen Dickinson, the British Retail Consortium Chief Executive, will talk about what Tom was intimating there, of course, about the lines of trucks at Calais trying to get into the UK ahead of a Brexit. So that's at 5:30 a.m., that conversation, about 15 minutes from now. That's 10:30 a.m. in London, and this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. It is a Friday to reset. It's supposed to be sliding into the holidays, and it most certainly doesn't feel like that. All sorts of distractions out there, but one of the major distractions, or when you have distractions, I should say, is you look at the litmus paper of the system, and that, of course, is currency pairs and their dynamics against dollars. There's no one better to do that with than James O'Neill, Jim O'Neill, Lord O'Neill of Chatham House in the chair there, and, of course, his service to the United Kingdom and to United Manchester as well. Jim O'Neill, let's do a little history lesson here, and I want to get you to compare and contrast where we are now, weak dollar, versus the Plaza Accord of long ago and far away, which was so gummed up. We had the Louvre Accord, and then after that, we had the Rubin dollar, big strength in the dollar in the 90s. We rolled over. I had a wonderful seminar with Lord O'Neill a zillion years ago.
Those are the days.
Where he killed it on Japanese yen, a huge 10 big figure call, and we're back there again. Are we going to see a government pressure for weaker dollar because of strength of other currencies?
Well, what I notice at the margins the past few days is already you start to see one or two countries, the ones I caught my attention, Canada and the Eurozone, starting to make noises about how the currencies are rising very fast. So throughout the whole of my close to 40 years of looking at the foreign exchange markets, what is remarkable, really, is the dollar ends up getting rescued whenever it does start showing a big decline at some point by other countries trying to resist it. And we already start to see the first signs of that. So I personally think it's very likely the dollar weakens further through the holiday period and into January. But I would imagine, take, for example, the Europeans, once we start going north of 125, you're going to get more and more of these noises. And to me, in the high 120 area, you'd want to start being a bit careful. Similarly, the Japanese, if the yen goes beyond 100, as I suspect it might try to, I would imagine the Japanese are going to start trying to resist it. From a US perspective, of course, a weaker dollar in this no inflation world, notwithstanding the inflation expectations comment you made earlier, I would imagine still the US is probably currently very happy about the dollar's weakness and would hope it would continue.
Oh, so, the old race to the bottom. Okay, let's go back to Barry Eichengreen and the golden fetters of another time and place, and then nascent globalization, and then we had Stiglitz's globalization with discontent, and a guy named O'Neill showed up and threw a brick into it all. I get all that, Jim. What is the why they're complaining so quickly? What is the why of 2021, 2022, where these countries seem to be so sensitive so rapidly on dollar weakness?
Yeah, it's a very good question. I think in the current circumstances, it's quite surprising because if you take it to, a true 40,000 feet, when you look at the kind of fiscal expansion that other countries, and in this case in particular, notably the Eurozone and Germany at the center of it, very different than the past. They're implicitly buying that there's a need for greater domestic demand support to their economies in the future. So they shouldn't be as sensitive about dollar weakness as they might have been in the past. And when it comes to it, let's see how real that is. But I think you raise a really good point. They shouldn't be so stupidly sensitive to it, because all it really shows is that they're saying they don't have anything to support their economies other than exports, and they can't afford to lose the competitiveness. But in the world in which we are in, You know, everybody's got to be somehow trying to create a way of having their own economies contribute more to the rest of the world rather than these historical, rather narrow approaches. So you're right, Tom.
Jim, what are you expecting for 2021? I know that, you know, that we have some crazy predictions, I guess, after the 2020 that we've had. You know, nothing is ruled out. But what's the biggest unknown that we're already thinking about? So not a black swan, that could hit the economy quite hard.
So I've been, so I'd say the consensus appears, from what I can see, the consensus on the sell side appears to have got to where I've been for many months, that 2021 would see a big rebound because I believe we would get vaccines. And I imagine over the holiday, we're going to get at least 2 more vaccines approved for distribution. So this will be the dominant theme, I suspect. But I'm worried, as always, when I think about it from a financial markets perspective. Rarely does what a big consensus think turn out to be the case. And I suppose one thing, let me emphasize, I don't believe this, but one thing that would bother me is that there is a huge difference between finding vaccines and actually getting the vaccines rolled out. I say that, you know, this morning I hear on the radio in the UK a politician very excitedly bragging about having had 170,000 people in the UK vaccinated. But actually, if that's the speed it's going to happen, it's going to take 2 years for everybody in the UK to be vaccinated, at least. And that is without things starting to go wrong as they try to get it around the country. So one has to be careful in thinking having the vaccines mean we all get vaccinated. And given how horribly this thing appears to be spreading again, if we don't get the speed of vaccination accelerated successfully soon, then some of my and other people's optimism about the recovery might start to have to be re-examined. I hope that's not the case, but that would be the biggest thing to threaten this generally strong consensus view right now, I would have thought. Obviously, other things out there, you know, how does this Biden administration that's going to be tougher on human rights, how does that play out? Not everybody focuses on China, but how's that going to play out in the Middle East? Are we going to see some deliberate efforts from the Saudis and the Iranians and others to try and upset the sort of negotiating stance? The Middle East has been remarkably quiet in 2020, and it's usually a place you can be guaranteed there's some kind of major problem, and we've not had one for a while, so my mind's always thinking about that as a risk.
Jim, thank you so much. Jim O'Neill, there, Chatham House Chair. Now, coming up in the next hour, we continue talking about Brexit with Maria Tadeo in conversation with Valdis Dombrovskis, European Commission Executive Vice President and Trade Commissioner. That interview coming up in 1 hour from now. This is Bloomberg.
Some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies,
are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Surveillance, I'm Ritika Gupta with the Bloomberg Business Flash. FedEx has failed to keep up with Wall Street's soaring expectations, jumping costs, profit margins in the fiscal second quarter, and it spurred doubts about how much FedEx will cash in from record package deliveries. Shares are lower today. Royal Philips has agreed to buy US-based biotelemetry for $2.8 billion. That lets the Dutch company expand in wearable heart monitors. Demand is surging for Philips equipment that allows doctors and nurses to provide real-time care over the cloud. And Goldman Sachs says that Bitcoin's rising popularity doesn't endanger gold. Bitcoin has been soaring recently. It went over 23,000 for the first time yesterday after surpassing 20,000 on Wednesday. JP Morgan argues that the rise of cryptocurrencies comes at the expense of gold, but Goldman says that there is no threat to gold's status as the currency of last resort. And that's your latest Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, the focus firmly on the markets, on Brexit and the U.S. stimulus. Neither of those are a done deal, and we're seeing a bit of volatility also when it comes to Bitcoin. So the focus not only on dollar, but of course on sterling. I know Tom was mentioning that we should look more at what the pros look at, which is euro sterling. With all due respect, we have been looking at it quite a lot. But again, we're just waiting for pound positions ahead of a pivotal Brexit weekend, Tom.
Yeah, and a real yield coming in. Inflation expectations, part of that equation, is decidedly higher this week. Coming up on the markets, James Athey of Aberdeen Standard. This is Bloomberg.
instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, to talk about the markets, to talk about Brexit, shall we, Tom, with James Athey, Aberdeen Standard Investments Director, who only came on the premise that we wouldn't talk about Brexit. But James, how much disruption to markets are we going to see, next week if we don't have a deal?
You lied to me, Francine. You said I didn't have to talk about Brexit. Again, you can see just in the move in sterling from last Friday to this Friday that last Friday, when it really did feel that we were quite close to the talks collapsing over the weekend and nobody coming back to the table, we had a fairly precipitous decline in sterling, and we've had some more positive noises this week, and we've kind of reversed most of that. But actually, the headlines, if you read them in aggregate, haven't moved on a lot, and that suggests to me that we're closer to pricing a deal than we are no deal, and therefore if there are indications that there won't be a deal, that will definitely be destabilising to UK assets. I think we also saw some evidence that it will be more broadly destabilising. So I do think it would lead to a risk-off period, not least because falling sterling will push the dollar higher, and that will probably affect other crosses. And when the dollar rallies, that looks risk-off.
James, is there a worry that we're spending so much time talking about Brexit, that we're spending so much time talking about stimulus in the U.S., that we actually miss the one thing that will reprice markets? What are we missing that could either see the rotation go further or actually just go through a massive market correction?
I mean, that's a really difficult one, isn't it? Because that psychology is self-fulfilling and self-sustaining. So if markets don't want to look at other narratives and other stories, and markets have shown that they're quite happy to ignore the present situation or even the near future, based on hope of a more distant future being more in keeping with how they're positioned or how they're choosing to position. So in my opinion, there are an absolute and utter preponderance of risks which are being priced at the very upside extreme of the distribution. We are taking the very best case in many of the things which will be driving economies and economics and politics over the next 3 at least months. The market is basically assuming all of those are either irrelevant or will just turn out okay. And normally that's dangerous, but we've seen how well supported these markets are by quote unquote liquidity. And given that liquidity is not going away, that sort of market disconnect can certainly continue.
Do you assume that the liquidity goes to equities?
No, I think I think that notion of it being an actual physical dynamic where liquidity actually flows towards equities is overstated. I think for me it's a psychological phenomenon. What we have are investors who believe that their investments are being underwritten. It's not that the liquidity is, you just have to look at the participation of some of the retail investors via platforms that we've seen in the news quite heavily in recent months. That's not a story of quantitative easing liquidity flowing to those people. That is more a case of markets always go up, so they feel emboldened to keep buying regardless of the price.
James, my chart of the year, and folks, I really haven't even made up the chart of the year with all the news flow and, frankly, the storm here in Washington in the last 48 hours. But James Athey, to me, if you take the log vector of inflation expectations in the United States, they are starkly different than the vector, the slope, of the United Kingdom inflation dynamic and the European inflation dynamic. What does that mean for Martins? Is that a discontinuity that leads to instability, or is that not a big deal?
I think it very much can be, because what we know, or at least what we think we know, is that the most relevant central bank for global economic conditions and global financial market conditions is the Federal Reserve. And so a idiosyncratic upside inflationary shock in the US, which, by the way, it seems to be coming hand in hand with a weak dollar, which I would argue economically is a tightening of conditions for all of those export nations around the world. The combination of those two has the potential to restrict the Fed's ability to be the provider of liquidity to the market when all things, when anything remotely negative happens. And so, yes, there are fundamental reasons why we should see some inflation divergence, and why we have done in recent years. The UK has very currency sensitive inflation. The Eurozone has massive structural issues and a huge output gap. China is going through an inflation dynamic which is different to what we've become accustomed to. The US inflation market, I think, is more pricing risk. It's saying, well, risk goes up, so break-evens go up. I don't think it's really based on underlying inflation dynamics. But I very much could see an upside inflationary shock, which is more heavily felt in the US because of the currency in particular next year. And that could very well present destabilizing problems for the market.
James, where would this inflation actually come from?
Yeah, I mean, I like breaking down the inflation basket into sort of 3 or 4 or 5 high-level categories, and you sort of have core goods, core services, energy, and shelter, for example. And so what we saw the inflation dynamic before the COVID crisis was that actually domestically generated inflation in the US was hot. Domestic services, which is the best proxy for that, 3%, and it was being masked by some of the global influences and the strong currency. I very much think we could see that dynamic reverse. We're going to see oil base effects being very positive around the end of Q1 and a little bit beyond that next year. Oil and energy costs definitely have an iterative impact on inflation because they're an input cost into other prices as well. And if the currency continues to weaken, we know that the US is an open economy and they do have a high propensity to import, and we should see import prices go up. And if the dollar is weak, then commodity prices are also pushed higher by that, and we're seeing that everywhere across the commodity spectrum at the moment. And so the combination of those, while I would expect that actually domestic services are going to remain somewhat less inflationary, you could also argue that supply side destruction, to the extent that we will see that, will be overwhelmingly felt in those domestic service providers, small businesses, restaurants, etc., etc. The combination of those very much has the potential to be inflationary.
All right, James, thank you so much. James Athey there of Aberdeen Standard Investment stays with us. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. A panel of Food and Drug Administration advisors has agreed that the benefits of Moderna's vaccine outweigh the risks. That sets the stage for Americans to have a second coronavirus vaccine. The FDA could authorize use of the Moderna shot as early as today. It's based on the same technology as the Pfizer and BioNTech vaccine that was approved last week. Greater Los Angeles is now the hardest hit metropolitan area when it comes to the coronavirus. Los Angeles County has an average 1,100 daily cases per million residents. Neighboring San Bernardino County has 1,400. New York was the hardest hit area in the pandemic's first months, but recently rural areas had been hit the hardest. Joe Biden says that efforts to use his son's problems against him amount to foul play. The president-elect told the CBS Late Show he's not concerned by accusations made against his son. Hunter Biden is the subject of a federal investigation into his tax matters, and Republicans have called for a special counsel investigation into his foreign dealings. The U.S. reportedly is set to blacklist dozens of Chinese companies. Reuters says one of them is the country's top chip maker, Semiconductor Manufacturer International. President Trump is said to have a list of about 18 more countries that will be denied access to U.S. technology. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
On a Friday evening in China, important headlines out off of their economic conference. There's any number of headlines. I'm going to go to one that really speaks to the moment, whether it's Brexit, stimulus in Washington, and the challenges of this pandemic. China says proactive fiscal policy to be more sustainable. I'll let Francine translate that. I have no idea what that headline means, but nevertheless, even China focused on fiscal dynamics here into the great challenges of 2020 and on to 2021. One of our themes with Raghurajan, we're thrilled that the former governor of the Bank of India will be with us with the Booth School, but I do want to speak to him about his shockingly prescient book on community in this pandemic. This is Bloomberg. Good morning. Futures flat.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix and Tom Keene on a Friday. I guess you're reading in for the weekend, reading in maybe with your time off or just getting through the holidays. Always a surprise. Nothing a greater surprise than the surge we've seen in the markets coming off the panic of March of this year. James Atheist lived this. He's at Aberdeen Standard. He is widely quoted on linking the markets together. James, I want to talk about the arch conundrum now, the great debate of valuation, where we don't know where the risk-free rate is. We really don't know what the Sharpe ratio is. We've lost our beta foundations and blah, 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 blah. How do you create valuation analysis into 2021?
Personally, I don't think that the frameworks, the tools that one should use to analyze valuation have really changed, Tom. I think it's that investors' attitudes towards them have changed. And again, I see that as a function of a collective psychology. This is a market which has been rewarded, in a Pavlovian sense, has been rewarded for a given set of behaviors, regardless of incoming information, regardless of fundamental analysis, either at a macroeconomy level or indeed at an individual company level. And for that reason, investors, commentators, strategists seem more prone to creating post hoc justifications for continuation of prevailing market trends, and those market trends are universally risk on. So I don't think valuation has changed that much. I think there is pretty convincing empirical evidence, for example, that the idea that low rates equals high multiples is not a thing. That in and of itself is not a sufficiently robust analysis to justify multiples to the moon. There has to be more to that story. Otherwise, you wouldn't have seen the derating of equities that we saw in Japan after the 90s, and you wouldn't see European equities or UK equities languishing.
Forget about Tesla, forget about Bitcoin, forget about DoorDash, the IPO frenzy and that. How do you rationalize a NASDAQ up 45% this year, a NASDAQ 100?
So, I mean, growth stocks are a specific case of where valuation metrics, the vast majority of valuation metrics, almost by definition, are not particularly useful. And the reason for that is that you have to make more, larger projections about the change in earnings, because the idea of a growth stock is that earnings are going to be changing, quote unquote, dramatically into the future. And so valuing based on today's earnings is obviously not going to give you a particularly informative picture. How do I rationalize the NASDAQ's rise? Well, it's twofold. One, again, that same dynamic about investors being, programmed to buy the dip. And two, the nature of a lot of those businesses is that they are operating at a distance during a pandemic where we've all been locked up at home. And the combination of those two has been incredibly powerful for that group of stocks.
What do those stocks do in 2021?
I mean, if I knew the answer to that, I'd probably be on a yacht somewhere. So obviously, I have no idea really what they do because, again, it's psychological. If we go through this rotation, that there is we're in a sort of very early, very nascent stage of this rotation, then they should underperform relative to the stocks which have been more negatively affected by the coronavirus. Again, the big question for me really is less about the relative performance and more about the absolute performance. There's specifically a small group of them, such a big dominant force in the overall indices that I wonder whether it is possible for that value growth normalization to occur within a bull market. I still think that is a hugely open question. So for me, there's a high bar to that occurring. I don't discount it, but I'm still minded to believe that valuation doesn't matter in the short term. In the long term is all that matters. I'm definitely less bullish on the economic outlook for some of the reasons that your previous guest Jim was referring to, and that combination I think would not be great for the stock market overall. But it's very difficult because investors are convinced.
James, thank you so much. James Hathi, their Aberdeen Standard Investments Director. Now, up next, we continue talking about Brexit and some of the disruption, of course, at the ports and with the large number of queues of trucks actually waiting to get in because of extra paperwork. Up next, that conversation with Helen Dickinson, British Retail Consortium Chief Executive. This is Bloomberg. explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. For the third time in 2 months, Google has been accused of breaking antitrust laws. A group of 38 states is the latest to file suit. They accuse Google of illegally monopolizing internet search and search advertising. That suit was filed a day after 10 Republican-led states sued Google. The Justice Department filed its own complaint in October. Google says it looks forward to making its case in court. The coronavirus pandemic is once again hitting meat packers across North America, and they're trying to avoid the shutdowns that left supermarket shelves empty earlier in the outbreak. Cargill has temporarily closed one of its beef plants in Canada after some workers tested positive. The world's top meat producer, JBS, sent thousands of vulnerable U.S. employees home on paid leave. And that is your Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, Britain's top retailers and food manufacturers are demanding lawmakers investigate disruption at UK ports. Now, the disruption has caused shipping costs to soar and raise doubts over the stability of supply chains after the country completes its split from the European Union on December 31st. Well, joining us now to talk about all of this is Helen Dickinson, British Retail Consortium Chief Executive. Helen, thank you so much for joining us. We're like 5 or 6 working days away from when the UK leaves the EU. No matter what happens, are supply chains ready for it?
Well, certainly retailers across the UK have been investing in, making sure they've got all the preparations that they need. But, whatever happens over the next couple of weeks, there's going to be some disruption at our ports because there will be new procedures and processes that apply for goods transferring between the UK and the EU on the 1st of January. So there will be some disruption. That, from a food point of view, will mainly be around fresh foods. So there's no need for us as members of the public to buy more food than we need. But as well as the sort of Brexit effect, and particularly that's relevant to food, we have a sort of global container issue, which is much more to do with COVID and affecting non-food items and imports that are coming from as far as Asia into the UK.
Helen, what does that do to the amount of, the prices that we'll pay for our food? So if you have red tape and if there's extra forms to fill out, will retailers automatically pass that on to the consumer?
Well, the biggest inflationary pressure will come from whether or not we have tariffs. And that is one of the sort of big unknowns that is 100% dependent on the negotiations over the course of the next few weeks. Or days or hours or however long it might be, but particularly because tariffs on food items are quite high. They can be 30, 40% for some sort of cheese and meat products as they come over the border. But as you say, extra processes do also add costs, but that's a much sort of lesser issue than the impact of tariffs. Retailers really haven't got too many places to go because there is, been such a sort of investment in, making stores and operations safe over the course of COVID. So there is a risk to inflation during next year, but the biggest risk of that comes from the effect of tariffs rather than the extra processes.
Ms. Dickinson, Tom Keene in New York, thank you so much for joining us today. I believe you started out long ago and far away at a chemist, or what we call a pharmacy, on High Street. With all this Brexit, with the ports, with all the battle of back and forth, there's one company that seems immune from all this, and that is Amazon. Give us your prognosis for UK retail next year with the Brexit not affected Amazon.
Well, I think Brexit will affect every retail business because whether you're talking about goods or data or people, the processes that will apply on the 1st of January and into next year and beyond are going to be different. And certainly from a sort of broader retail point of view, what we've seen in the UK and, I'm sure in the US and in many, many other countries around the world is a real acceleration of the shift to digital retailing. And whether that is Amazon or other businesses that are either pure plays or that actually have physical space as well as digital space, that pivot has been big. It was a trend that was already underway, and therefore lots of other businesses are really investing in that digital offer to take on the Amazon competition, if you like.
Will we see rents go down then? I mean, can you make a prediction that rents are going to be very soft next year?
Well, I don't know what's happening over there, but certainly over here we are already seeing that. So retail commercial rents, particularly outside of prime locations, even before the pandemic, were falling. The impact of the pandemic has caused that to accelerate. So they are, 20, 30% down, 40% down on what they would have been a few years ago. So that is already happening.
Given a disruption from Brexit, given disruption that Tom was talking about, with big giants such as, Amazon and online retailers, is there anything that the UK government can do to soften the blow for retailers?
Well, the main thing, particularly from what happens now, I mean, a lot of the support that has been given has been superbly valuable. We've seen the furlough scheme, which has been used by lots of businesses that have been impacted. We have a tax here, a property tax on commercial premises, including retail premises, and there was a big 100% holiday relief for that for retail and hospitality businesses during the course of 2020, 2021. So that's been great. But the key thing that the government can really think about is what happens to that relief next year in April 2021, because if it reverts back to its previous level, those businesses that have been most affected, that do need the targeted support, will really find it much more difficult to remain viable, and that's where we need to see the government effort.
Helen, thank you so much. Helen Dickinson with British Retail Consortium. Coming up on the dollar, Rebecca Patterson of Bridgewater. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
it is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This morning, a quiet in the markets with equities near record highs. Inflation expectations, they continue to surge, less so in Europe and the United Kingdom. The stimulus talks, they are not going well. Could there be a partial government shutdown? The heart of the matter, what role should Washington play in crisis? And she will oversee 1/5 of America's land. Take Route 66 west of Albuquerque. Biden picks a Native American for Interior. Good morning, everyone. Bloomberg surveillance from New York, from London as well. We're looking at the Bloomberg world on markets. And guess what? The battles of politics never, ever, ever end. It will kill us in this hour to continue this debate forward. At this moment, we've got some important interviews coming up, actually. I try to get an update on this weekend and Brexit. Francine?
Yeah, we're trying to get two updates, actually, on stimulus talks in the U.S. and on Brexit. 11th hour, 11.5 hour, and we still are none the wiser about exactly what will happen. So we'll have an important Brexit briefing, Tom. And then the other thing, actually, is I would point to PBOC and some of the headlines that you brought us about 10 minutes ago. If you look at, the major central banks, PBOC had talked about tightening. It would go against all the other central banks, and we could see some very interesting currency moves on the back of it.
Well, markets churning here, really quiet, really flat, maybe looking for news of the indeterminate Brexit, the indeterminate stimulus as well. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. The U.S. is on the verge of having a second coronavirus vaccine approved. A panel of outside experts who advise regulators has given it's okay to a vaccine made by Moderna. The Food and Drug Administration could authorize the shot today. The vaccine showed a high rate of effectiveness in late-stage trials. The U.S. government faces the prospect of a partial weekend shutdown. That's according to the Senate number 2 Republican, John Thune. Top leaders in both parties are working to complete a coronavirus relief deal that's tied to a giant government spending measure. Thune says some senators opposed to parts of the relief bill may not go along with another funding extension, which could lead to a shutdown. The U.S. reportedly is set to blacklist dozens of Chinese companies. Reuters says one of them is the country's top chipmaker, Semiconductor Manufacturer International. President Trump is said to have a list of about 80 more countries that will be denied access to U.S. technology. The UK's chief negotiator warns that time is running out to reach a trade agreement with the European Union. And British Prime Minister Boris Johnson says talks will fail unless the EU backs off its stand on fishing rights. Behind the scenes, though, officials say the talks are progressing and negative language can be just a negotiating ploy. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. Very quiet markets. I've just got one screen today with futures mix, red and green on the screen. The VIX 22.10 gives us some information. I do want to point out inflation expectations as part of that yield calculation are higher, and that gives us a much greater negative real yield. That's really been the story of my week, negative $1.03 churning. Francine?
Yeah, I think there are bigger factors at play, Tom, so the market's not really moving that much. The euro did drop as both sides in Brexit talks are warning that progress had hit another snag with just a few hours remaining to find a deal. European stocks are fluctuating. Again, it's partly Brexit. It's also partly what's happening in the U.S. and failure to find stimulus for now. And then a couple of things that actually I'm watching out for. I feel like the news story is definitely towards China. The U.S., we understand through various press reports, is preparing to blacklist some Chinese companies. That could have an impact of renminbi. And then we have also a bit more on PBOC. And then Bitcoin, 22,845. Tom, I'm on Bitcoin watch.
Bitcoin. That was a little bit of fire yesterday in the old Twitter feed on Bitcoin. The news cycle, in Washington has been extraordinary. If you're the Senate Majority Leader, you can give a speech and be certain 2-3 hours into the evening, well, everyone's moved on from your speech. Let's listen to a pre-evening Mitch McConnell.
And a bipartisan, bicameral agreement appears to be close at hand. The outline that I've been discussing with Democratic leader Speaker Pelosi and Leader McCarthy would get another huge dose of bipartisan support out the door as fast as possible. We've yet to nail down every detail, but in broad strokes, we've been discussing the targeted second round of job-saving Paycheck Protection Program that Republicans have sought since last summer.
And then news happened, and the Senate Majority Leader and others set themselves up for an extraordinary weekend, and they really don't want to be in Washington on this holiday weekend. Martin Schenker is our Chief Content Officer and joins us this morning to recalibrate. Marty, what will you and our Washington team look for on this Friday as we go into weekend meetings?
Well, obviously, they're going to continue to have discussions on the bill, and it's just the typical Washington wait until the last moment dance. The funding of the government runs out at midnight tonight. They could go past that deadline without having a major impact on the government until Monday. So I would expect it to go right to the wire, probably sometime on Monday.
Who has the high ground here? Who is holding the cards?
Well, I don't know that anyone is particularly has the high ground here. They seem to be on the same page. They all recognize going home or recessing without passing a rescue measure is like untenable. So I think they'd both like to go back and say, victory achieved, but they're going to take their time doing it.
Marty, good morning from London. I don't understand, this is so un-European, right? I mean, we're in the middle of a pandemic. People need the money. How will this play out in the Georgia Senate race?
Well, it's interesting. I mean, I keep making a mental analogy to Brexit. I mean, that again, this pushing to the very last moment is typical of this Congress. Now, Joe Biden would like to change that when he gets in office, and perhaps he can. I don't know that it's going to have any impact in Georgia unless, of course, they don't reach an agreement. And then the perception of who's at fault for that will be key in that race.
What will be Joe Biden's, biggest challenge in the first 100 days?
I think he's under tremendous pressure to use executive orders to undo a lot of the Trump administration policies on such things as immigration, on drilling, on a whole host of measures. So he will need to hit the ground running. He will have a honeymoon, but it won't be as long as previous administrations have had.
Marty, it was stunning to see the president-elect name a Native American as Secretary of Interior. For our international audience, the symbolism of this leaves one speechless, really extraordinary. Are we going to be as shocked at something as larger as the Attorney General?
I think that, the Interior Secretary's...
I'm placing a new order to sell short euro at 122.53. Okay, order placed to sell short at this price. Let's see if we'll be able to sell.
That will be in stark contrast to the current Attorney General.
Marty, what can Joe Biden do on cybersecurity? I mean, it's absolutely incredible to see the cyber attack that, has been reported through sources across U.S. government agencies by supposedly Russia.
It is truly extraordinary, and it is a real question what Joe Biden will do. It's also interesting to see what Donald Trump is going to do in the last 30 days of his administration, if anything. I mean, he's displayed a reluctance to take on Russia. Whether that will be the case is something we should really look at. And I also keep thinking about whether or not what are the U.S.'s cyber attacking policy is. You got to believe that the U.S. is doing this as well. And so it's really very complicated issue on how you retaliate.
Okay, I want to ask about pardons, but maybe I'll ask about China first. We're also hearing that there could be another 12, if not more, Chinese companies blacklisted by the Trump administration. Is that really to box in the next administration?
Well, we and others have reported that Donald Trump has essentially told his administration, you can do whatever you want to China short of declaring war in the waning days of his presidency. So will it box in Joe Biden? It will make it more difficult for him to relax those restrictions without looking weak on China. So, yeah, it will tie his hands somewhat when he becomes the next president.
Marty Schenker, thank you so much. Greatly appreciated. Our Chief Content Officer at Bloomberg News this morning. Coming up, this is going to be an important conversation. With all the news flow, we forget where the math of the pandemic is, and it is grim. Atul Gawande will join. He's with the COVID-19 task force that Mr. Biden is putting together. That with David Weston, the 12 noon hour. This is Bloomberg. Good morning.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Surveillance from New York, from London, markets churning here, red and green on the screen. Really, to be honest, folks, very, very quiet markets that could change on a dime with a lot of uncertainty out there on Brexit, on stimulus, and any number of topics as well. Topic one, as we heard from Lord O'Neill a while ago, is on dollar. Rebecca Patterson joins now with Bridgewater, Director of Investment Research. But I've really got to go, Rebecca, to your acclaim, which is dollar analysis. What will the responses of the political economies to a weak dollar be? They're obviously going to be different than what we saw off of Plaza towards Louvercord. They're obviously going to be different than the collapse of the dollar off the Rubin dollar. This time around, how will they respond to the ever weaker dollar?
Position opened at 122.53, just right here.
Get inflation back up to and beyond its 2% target. And so as the Fed puts a lot of liquidity in the system, keeps rates low, that has been weighing on the dollar, particularly since the spring. And I think that is the likely path going forward. But it's a zero-sum game, as you and Francine know. So if the dollar goes down, everything else is getting pressured up to different degrees. And no one wants that. So we've seen some verbal shots across the bow in Europe. We've seen some intervention in some Asian economies, Thailand, Taiwan. And not everyone can win if they're all trying to push their currencies down at once. And so I think that is going to be one of the ways we see differentiation in the markets next year, is that relative currency weakness. But we're also seeing that currency weakness and expectations of more of it, or efforts to try to get more of it, feeding into other storeholds of wealth. Gold, for example, we're seeing, as you mentioned, inflation expectations starting to go a bit higher in the U.S. That's on the back of expected dollar weakness in part, I believe. And even things like Bitcoin, some people would argue that that is a reflection of expectations for currencies continue to weaken.
Well, let's wade in on it right now. You brought it up, Ms. Patterson. I didn't. And don't give me this Ray Dalio line. You're not going to give me an honest answer. Bridgewater in Bitcoin. How long is long, and can it go to 400,000 as Mr. Minard at Guggenheim theorizes?
I think Mr. Minard is spending more time on it in terms of his portfolios. Look, I think for people who own it, they're extremely happy. It's up, 220% this year. For institutional investors who are looking for stable storeholds of wealth, do you want an asset that collapses the way it did in 2018 and has the type of appreciation it had this year? So I think the volatility of Bitcoin and the lack of liquidity, although that is changing very quickly, it's evolving quickly, could be a concern for some investors. What's really interesting to me about it, and I'm not trying to dodge the question, but I think this is really important for your viewers to understand, is how the development and the quick evolution of cryptocurrencies is forcing, I think, central banks to think a lot harder and faster about their own sovereign cryptocurrencies or central bank digital currencies. We already see China doing pilot programs with it. We're seeing a lot of different central banks now kind of creating sandboxes to play with it. Places like Singapore, even the Bahamas earlier this year launched its own quote unquote sand dollar. And I think this is going to continue. It'll be really interesting when Janet Yellen becomes Treasury Secretary to see her stance on this. What she said so far on cryptocurrencies is that she is also a little skeptical, just given the regulatory backdrop and the lack of stability so far. So I think what happens in the U.S. from a regulatory point of view is going to matter a lot for these currencies as we look to 2021. What is going to be the U.S. government's stance on them? So I don't own any myself. But it's something I'm following very carefully, as is Bridgewater, obviously, because we want to see where this could evolve and when and how it could make sense for institutional investors.
Rebecca, would it ever actually replace gold? Is this gold 2.0?
Well, a lot of people are pointing to that because of the, I guess, relatively similar supply dynamics of certain cryptocurrencies like Bitcoin and gold. But again, if you think about what makes something a storehold of wealth, it is liquidity, it is ease of use, it is stability. And I think that some cryptocurrencies like Bitcoin are starting to check those boxes, but certainly they don't check all of them yet. But there are things where cryptocurrencies might be more useful than something like gold in terms of, having the ability to transact in it around the world. Obviously a little harder to bring a bar of gold with you as you travel around the world. So I don't think the analogy is quite there yet, comparing it to gold, but it's certainly something that we're spending a lot of time researching.
Rebecca Patterson with us, in charge of Bitcoin analysis at Bridgewater and Director of Investment Research as well. We will come back with Rebecca Patterson if she's kind enough to stay around. We'll be Bitcoin free in our next section with her. Coming up on one of the Faro properties, the Open, Mohamed El-Arian, Bloomberg opinion columnist. Stay with us. Slight green on the screen. This is Bloomberg. Good morning.
concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Surveillance. Good morning, everyone, from New York and from London. We digress to the arts, and we don't mean Bob Dylan's $300 million transaction with Universal or the stunning success of Taylor Swift putting out not one but two albums, writing off a couch in essentially a cabin. We talk about how symphony orchestras are desperately adapting to this pandemic, providing leadership worldwide, the Dallas Symphony Orchestra, and of course the two orchestras of Boston, the Boston Symphony Orchestra and the Boston Pops. Our Janet Wu takes a look at the challenges these two symphonies face.
The orchestra is an art form with no personal space. Musicians perform shoulder to shoulder to synchronize as one. When the pandemic struck, the Boston Symphony Orchestra immediately canceled its season.
We have, candidly, in Boston, maybe the largest audience along with Los Angeles. So in the course of a year, we've lost about $50 million in ticket sales and other earned income.
How does an orchestra perform when there's no room for social distancing? You make room. Here at Boston Symphony Hall, they more than doubled the size of the stage.
We've taken a 2,400 square foot stage and made it close to a 6,000 square foot stage. And all the string players are 6 feet apart. The brass section is basically in a different zip code than the strings, but somehow we've learned our physics. Sound and light travel at different speeds, so everyone's had to make the appropriate adjustments, and then we're making music again.
All this is possible because 120 years ago, BSO founder Henry Higginson had the uncanny foresight to build a concert hall with removable seats. The seats are taken out for Pop's dinner concerts and even for an elite squash tournament.
But no one ever dreamed these century-old seats would help the BSO face the pandemic.
And one of the great ironies is we're reaching more people than we've ever reached.
Nearly 20 million unique viewers since performances went online.
We're touching more lives with music than we ever have before, 6 continents, 88 countries. And so we're able to fulfill our mission.
The Dallas Symphony Orchestra also got creative.
We did, believe it or not, 90 concerts outside, chamber musicians all around Dallas on streets, driveways, cul-de-sacs, parks.
And indoor concerts with just 42 musicians. The audience is capped at 150 in a hall built for 1,800.
People would shout thank you from the audience to the orchestra as they were getting off the stage, which was just so poignant.
The silver lining is that someone with tickets all the way up here can now get this close to the musicians.
You get angles, you get perspectives that you can't have in a normal concert.
Facing incredible challenges, the BSO and DSO are determined to come back, knowing music is more important than ever. In Boston, Janet Wu, Bloomberg News.
This has been extraordinary this year. Our Janet Wu there with the challenges of two orchestras. I really want to do a massive shout out to Gramophone magazine out of London that's provided huge leadership for the classical community during this pandemic, and Pathbaking Francine of the Berlin Philharmonic. They're the ones that invented digital classical music.
Yeah, Tom, I don't think we speak enough about the arts, and there's really uproar here in London, which was considered, you know, the cultural capital in Europe, and the fact that in the pandemic, the government has just not looked after the arts enough with support to artists and support to productions. And I think we'll see a big shift in where culture will go from now in the next 24 months.
Look for the Dallas Symphony and the Boston Symphony with Bloomberg this week. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg surveillance. Good morning, everyone. On a Friday, what does Francine Lacroix demand? A good chart. You know, the charts can be interesting here as well. One of them we talked about this week was Canada, which is dollar Canada, which is loony, and it has moved big figures, something of the theme we've been talking to Rebecca Patterson about. She's at Bridgewater, Director of Investment Research. Rebecca, all this is fine. How does Canadian loony big figures, 6 standard deviations, I fitted it the other day asymmetrically, how does that fit into, say, equity analysis or interest parity analysis?
Oh, Tom, you're always fun at 6 a.m., aren't you?
I'm trying.
Only on Fridays, Rebecca.
You know, I actually think it's really important that you brought up currencies, because so many people, when they're thinking about their portfolio, thinking about a stock and bond allocation or what kind of country exposure they want, but most investors don't hedge currency risk. And so your return is really going to be the equity and the currency. And so you do need to think about both. And I think a lot of folks are just afraid of currencies. They're complicated. And so they just say, I'm just going to worry about the equity, and the currency will mean revert over a long enough time period. But I think as we go into 2021, making sure you're looking at both attributes of your portfolio, the currency as well as what other asset in another country you're holding, is going to be particularly important, because as we get different paces of economic reopenings, as we get different sizes of fiscal and monetary stimulus, as we get different currency responses in a weak dollar environment, all of those things are going to affect your total return through the currency. I think there will be a lot of differentiation next year. I mean, even this year, look at the renminbi, right? The Chinese renminbi up about 6% against the dollar. And that possibly could continue. I think you mentioned earlier this morning about Chinese monetary policy looking fairly steady next year while everyone else is trying to ease further.
Rebecca, I've got to switch gears to parity strategies, derivative strategies, matching A against matching B to squeeze out a little bit of a gain. What have you learned this year about parity strategies at the zero bound or with negative real rates where they are?
No, I think so many investors around the world are grappling with what do you do with bonds in your portfolio in terms of having different types of assets and using them for diversification, for return, et cetera. And a lot of developed market bonds in particular, frankly, just aren't very attractive at this point. So what do you do, to your question? And I think the good news is there are a lot of options. First of all, the strategies we run never depend on any one asset. We're always looking for a balance of assets that are going to perform well in different economic environments. But to the point on bonds, a zero rate world, I think you have options, whether you're looking at gold or inflation-linked bonds, especially in a world where the Fed is trying to push real yields down and inflation up. I think you could even look within the equity market to companies with stable cash flows, with companies that are more resilient, for example, and be able to take some of those equities and engineer them in such a way that you can get something that, while certainly not a substitute for bonds, can be a complement to your portfolio. So I think one thing we've learned this year, and obviously this is research that started years and years ago, but the pandemic certainly made us double down our focus, is making sure that there are an ample portfolio, if you will, of assets that can provide that diversification stability, but still help us get our return.
Rebecca, what's the first to-do thing on Janet Yellen's list?
Ooh, that's a good one. You know, Janet Yellen, I think, is such a right person at the right time for this seat, in that, you know, she's been at the Council of Economic Advisors, so she's been in the White House, she's been chair of the Fed, now Treasury, and we are in a world today where we believe monetary and fiscal policy have to be much more closely aligned. So the fact that she understands how the Fed works inside out and can really bring those two bodies together to make sure that the Fed can facilitate the budget deficits we need. You know, the Fed needs to keep printing. We expect QE is going to be running, in the markets discounting about 7% of GDP over the next year or two at least before tapering begins. So they're going to facilitate the large budget deficits by keeping interest rates low. I think Janet Yellen is going to be part of the team that's trying to make sure we have enough fiscal support to bridge the gap until the vaccine can allow a real reopening of the economy. And that's a couple of quarters away. And even then, you know, we are in one of the lights at the end of the tunnel, I guess, or silver linings, if you will, to this horrible year, is that with interest rates so low, debt service costs so low, it is a time to think about investment in the economy that can increase productivity growth in the years to come. So things like infrastructure, things like education, research and development, the hurdle, if you will, for those things to be additive for the economy, both short and longer term, is pretty low. And so I would think that Janet Yellen, one of the things she'll be doing when she gets in is working with the rest of the administration and Congress to try to see what they can get done on that front.
I mean, just because she knows also the Fed intimately, is it less likely that we have some kind of policy mistake because the channel of communication will be open in 2021?
I certainly think that's helpful. I wouldn't want to go on the record saying there will never be a policy mistake in Washington, because at the end of the day, we're humans, and there are a lot of humans running around in Washington. But I definitely agree with you. I think the fact that she knows both parts of the policy spectrum, if you will, monetary and fiscal, augurs well for really good coordination in a world where that has to happen. Whereas in other countries, you're in London right now, we're looking at, some kind of Brexit deal, hopefully in the next few days, whether it's a free trade agreement or a crash out. But here we are looking at 2021, and the Chancellor of the Exchequer is still today talking about possible fiscal tightening next year. And that to me is a little concerning, because if you have monetary trying to get the inflation rate up, trying to reflate, and fiscal going the other way, that could be something that slows down the recovery in the UK vis-a-vis other countries. Again, part of the differentiation we expect to see in the year ahead, really driven by fiscal policy stances.
Thank you so much, Rebecca Patterson, there, Bridgewater Director of Investment Research, joining us this morning. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. A panel of Food and Drug Administration advisors has agreed that the benefits of Moderna's coronavirus vaccine outweigh the risks. That sets the stage for Americans to have a second vaccine. The FDA could authorize use of the Moderna shot as early as today. It's based on the same technology as the Pfizer and BioNTech vaccine that was approved last week. Greater Los Angeles is now the hardest hit metropolitan area when it comes to the coronavirus. Los Angeles County has an average 1,100 daily cases per million residents. Neighboring San Bernardino County has 1,400. New York was the hardest hit area in the pandemic's first months, but recently rural areas have been hit the hardest. We're getting a better view of just how large the cyber attack by suspected Russian hackers is. Authorities have now warned the hackers present a grave risk to federal, state, and local governments, and to the private sector as well. Microsoft says its systems were exposed to malware, and Bloomberg has learned that at least 3 state governments were hacked. So was the U.S. Nuclear Weapons Agency. And Joe Biden says that efforts to use his son's problems against him amount to foul play. The president-elect told the CBS Late Show he's not concerned by accusations made against his son. Hunter Biden is the subject of a federal investigation into his tax matters, and Republicans have called for a special counsel investigation into his foreign dealings. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Futures up 4, Dow futures up 11. Coming up with Maria Tadeo, the gentleman, I should say, from Latvia. Valdis Dombrovskis is EC Executive Vice President and Trade Commissioner. He has an interesting and important perspective from Eastern Europe on the Brexit negotiations. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Nous sommes à un moment de vérité.
It's the moment of truth. We have very little time remaining, just a few hours, to work through these negotiations in a useful fashion if we want this agreement to enter into force on the 1st of January.
It is interesting, and you can get out the calendar, as Mr. Barnier is doing in Europe. We see this in America, but on the Brexit debate, it just continues, but there's the calendar. Maria Tadeo knows the calendar. She is in Brussels and knows that December 31st beckons. Maria?
Yeah, thank you so much, Tom. And now we're going to be joined by the European Union Executive Vice President Valdis Dombrovskis, who focuses on trade. And Vice President, before we talk about Brexit, I want to ask you about China. There's a lot of speculation today that the European Union and China are going to sign a new trade arrangement before the end of the year. Is that going to be the case? Are you going to sign a new trade arrangement?
Well, we are working very intensively with China on comprehensive agreement on investment. And indeed, work is in very advanced stages. We had a very productive last round of negotiations. I would say we are not quite there yet, but it's definitely feasible that if things move forward as they are moving now, that we can conclude still this year.
Okay, so if you can get it done in the next 2 weeks after you sign it, is that going to guarantee that you have more market access in China? Is that what the content is about?
Yes, this is first and foremost, of course, agreement about investment, but that's the idea. So what we are concentrating is level playing field issues. So, for example, disciplines on state-owned enterprises, questions on forced technology transfers, transparency of subsidies. And also it's about market access, so how European companies can better access China's market. Of course, there are also market access offerings from our side, but the idea is in the case that we need to rebalance the economic and investment relationship with China, because currently Europe is substantially more open to Chinese investments than China is to EU's investment.
Okay, and that could happen in the next 2 weeks. And let's also talk about the U.S., just to put this aside. There's still pending litigation, especially when it comes to the lobster case. Do you foresee a situation where you lift completely all the tariffs that are happening around?
If we discuss specifically a so-called lobster deal, I would say everything is on track. So we expect lobster deal entering into force. So this is indeed a tariff agreement on targeted tariff reductions. So I'm glad we managed to bring this lobster deal to a successful conclusion. Of course, there are a number of things where we need to deal with US bilaterally concerning the tariffs and addressing certain problems. I would mention, for example, steel and aluminum tariffs, Airbus-Boeing dispute, and definitely we'll need to see how we cooperate in the international stage, in the context of WTO reform, in a context of multilateral rules-based cooperation.
And are you relieved that Joe Biden is going to enter the White House and start the new year? I know you talk about a new relationship.
Indeed, the European Commission has published a communication on, so to say, fresh start of transatlantic relationship, and there is important part on trade. And the first signals which President-elect Biden is sending in terms of his commitment to multilateralism, his commitment to improve relations with the EU are very encouraging. So we're willing to build on that basis.
Okay, and now let's talk about Brexit. How confident are you that we get to see a deal before the end of the year?
Well, as you know, we are now in indeed last-minute negotiations. So there is progress, for example, as regards one of the key questions of level playing field. There are still important gaps which need to be fulfilled, but I would say technically pretty much all the things are worked through. So now it's more of a question whether there is a political will for this last-minute push to address really difficult questions and to make compromises.
Okay, what about the ratification? The European Parliament says if they don't get a text by Sunday, they're not going to vote on it this month. And that means that potentially we head into a situation where the leaders agree to a deal that's not ratified. That's very problematic.
That's indeed very problematic. That's why it's important that we engage very closely with European Parliament, because we must admit that the time for parliamentary scrutiny of the deal is already extremely compressed. And European Parliament has already agreed to come for extraordinary session between Christmas and New Year, if this would be needed for Brexit deal ratification. So, of course, we need to engage closely with European Parliament to see when really is the last moment we can submit the text of the agreement so that it can be ratified still this year and enter into force as of January 1st next year.
Okay, just very briefly, as a final question, what happens if there is a deal on the leaders level, but it's not ratified? Do you foresee that perhaps for 1 or 2 weeks you are going to trade on WTO terms?
That of course would be a very unfortunate situation if there is a deal and it's not ratified. So I think rather we now engage with European Parliament and find a way when we really need to finalize negotiations so that it can be still ratified. And I would say it's not that now there are big technical questions which require lots of time to address, lots of technical works preparation. It's all done. Now it's really about political decisions and addressing some of the difficult points in the negotiations to get it over the line.
Okay, so technicalities are done. Valdis Dombrovskis, thank you so much for joining us. That is the Executive Vice President of the European Union joining us on Bloomberg. Francine?
Thank you so much, Maria. Let's just get to some breaking news now. We did have confirmation of something that we broke earlier. The U.S., this is according to the Treasury Secretary, will blacklist actually Chinese firms, including SMIC. So the Treasury, not the Treasury Secretary, but the Commerce Secretary, Wilbur Ross, is speaking in an interview with Fox News right now. He says that the Biden administration could change the number of firms that are blacklisted by the U.S. But again, just seconds ago, we have confirmation of what was reported earlier by Reuters, citing people familiar with the matter, which is the U.S. Has now blacklisted Semiconductor Manufacturing International Corporation, SMIC, and a dozen other companies in China. Again, we understand through our reporting that Donald Trump is set to add around 60 more companies and their affiliates to the Commerce Department's entity list. The majority, of course, are Chinese and will join the likes of Huawei Technology on a list that basically denies them access to U.S. technology from software to circuitry. So this could have a huge impact on SMIC. Already the share price was down this morning after that press report, and that's just been confirmed by Wilbur Ross. Coming up, we track COVID-19 with Dr. Andrew Pekosh, at Johns Hopkins University Bloomberg School of Public Health professor and virologist. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Isn't it, just how sensitive the markets are to any commentary about trade? We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19, and Johns Hopkins has been at the forefront of the international response. Every day, we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Andrew Pekosh. He's Johns Hopkins University Bloomberg School of Public Health professor and virologist. Professor, thank you for joining us. What will the holiday season look like for people on the front line?
Well, you know, case numbers continue to increase across the U.S., and what that means is that the healthcare workers that are in hospitals, that are on the front line there, are going to need to be on guard and spending a lot more time at work rather than at home with their families. The case number surges in the U.S., you know, happened after the Thanksgiving holidays. They continue to be at a high and unsustainable rate, and it's important to understand that it's the human power that is important at hospitals. So it's not just number of beds that are being occupied, it's how many people are available to take care of those individuals that are sick. And this pandemic has taken a real toll on the healthcare workers in terms of them getting sick and in how much stress they have endured to deal with all of the severe cases that are coming through.
Dr. Pekosh, when you look at the rollout of vaccine, is it going according to plan? I know there are concerns about, you know, some people with possible allergies not reacting, but overall, are you satisfied?
Yes, this is now going to be a logistics problem primarily. Although safety monitoring is going to continue to go forward. Let's touch on that first. I think, remember, this is an emergency use authorization. So we're going to continue to monitor for safety and for efficacy in individuals that are getting the vaccine, because now we're going to see a much larger number of people get the vaccine than were in the clinical trials. So safety and efficacy is still a primary concern and will be monitored. The flow of vaccine is always going to be a little bit variable. We're talking about production at a scale that companies have never had to do before. And so you certainly should expect to see some variations in the number of doses that are coming through on a weekly basis. It'll become even more complicated in 3 to 4 weeks when people have come back for their booster doses. But again, these are logistics problems. People have been thinking about these problems, putting things in place for months now. We expect to see some speed bumps, but we don't expect to see roadblocks. And I think the system is flexible enough to deal with some of those things as they come down the pipeline.
Andy, what can you tell us about the pace of vaccination? So you mentioned distribution, but if we go at the similar pace, how long will it take to actually vaccinate enough people in the U.S. to make sure we have herd immunity? Is it too slow?
Right now, it will be a little slow. I think we're banking on the fact that we will have more vaccines coming on the market over the next couple of months. We just heard this week that Moderna is all set for their formal FDA approval here in the United States. More Moderna vaccine doses are targeted for the United States. And we expect down the line, as more vaccines come on board, that we'll see these large jumps in the amount of vaccine doses that are available. It's important right now that the vaccination strategy is aimed at limiting severe cases, and that's why we've targeted those populations first. Then we'll move to the regular population.
Andy, thank you so much. Andrew Peckosh there of Johns Hopkins, and happy holidays. We're also getting some breaking news out of the FT actually on Lloyd's. So we understand through the Financial Times that Lloyd's Banking Group has cancelled all staff bonuses for 2020. Now, according to the FT, who say they've seen a note, they have done so because of a sharp fall in profits caused by the pandemic, and they basically are just saying that they do not meet the criteria for payouts in 2020. That's the latest on Lloyd's. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
There's an argument to be made that perhaps we've gone up a little too far, too fast.
These companies have had these parabolic moves. There will be a day of reckoning.
When you look at hiring, you're seeing those permanent layoffs increase.
It's quite possible that you'll see numbers start to disappoint. The real yields haven't gone up, which is another reason why the Fed price stood pat.
It's going to be really difficult for the Fed to latch onto this notion that they're not going to do anything until 23.
The way people are spending, the timing of that spend has really shifted.
I do see the economy getting back to something close to normal in the second half of next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This
It's Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. With equity futures a little bit higher, up 0.1%. The equity market, Tom, all-time highs. Once again, we're playing deal or no deal down on Capitol Hill.
Now, quieter markets today. The real yield comes in, John. I know you'll talk about that later this afternoon, but down in Washington, there was a shift. For those of you waking up in America, what you knew at 4 p.m. or 5 p.m. yesterday is gone. There is a real stalemate, John. Talk of a partial shutdown from Thune of the Dakotas. And just as importantly, John, the idea, maybe like Brexit, I hate to bring it up, John, but they're going to work all through the weekend.
They are going to work through the weekend. There will be consequences if they don't make a deal in the United States. We'll talk about Brexit another time. Through the weekend they go, Tom, trying to hash out a deal on funding the government and sticking it together with a massive relief plan. And that relief is very much needed, and we've seen that in the economic data through much of the month of December.
There's an overlay here besides economic data. And, John, I think we really need to recalibrate. In the news flow yesterday, folks, I thought we brushed over claims. John, claims were almost 900 million. Normal is 220, 230. 200, 195 is a good day. We can't say enough about how out of whack the labor economy is versus what normal was